Cake and coffee on Bahnhofstrasse this morning. Linton Springley, very nice. Let's talk a little bit about what is happening with this open. Here we go. The final numbers we are about to see at the start of European trading. Here's the opening trade. A positive picture is expected to emerge. So let's see how the FTSE gets out of the gate. Oil prices are up a little bit overnight. Just bear that in mind when you look at what is happening with the London market as well. We need to price that in. Maybe a little bit of uplift coming through to the oil stocks. But we're up by 1/2% at the moment. There you go. Wait for the other markets to open. The stock 600 up by 0.2%. A little bit of a catch-up trade. We are expecting a little bit more. So expect those numbers to climb as the FTSE 100 now gets up to around 0.5%. But it is really the countdown to the Fed that we are now marking. We are going to get some news out of Europe this morning, but from a financial markets point of view, this is all about the Fed. The IBEX is up by 0.4%. The DAX is up by 0.3%. The CAC is up by 0.5%. Lizzie, what's going on below the surface?
Yeah, look, that's the regional picture. Break it down by sector, and every single sector in the green this morning, led by media, higher 0.9%. Bottom of the basket, healthcare, but still eking out gains. Tech above that. And if you look at the single stocks that you were mentioning, Anna, Kingfisher, after its results, those shares higher 4.4% this morning.
You talked about media going higher, and I was just looking at what it is that's driving that sector. Universal Music Group seems to be one of the names that's higher this morning, up by 2.5%. They're giving us an update on what they're targeting, and that seems to be going down pretty well with investors. They're giving us their targets in terms of EBITDA and revenue at constant currencies through to 2028. So on these renewed expectations, that business doing okay. The Universal Music Group share price up by 2.6% this morning. So that's one. It seems to be one of the drivers in terms of the sector moves that we're seeing. WPP also higher in the media space, but that is one of the better performing sectors. Retailers also doing okay this morning. In fact, that's just become, along with energy, some of the best performing sectors this morning. We do see that energy price, the oil price at least, ticking a little higher once again, 73.15 on Brent this morning.
Shell is the biggest points gainer on the stock 600 this morning. You've also got Total up quite nicely. It's interesting, Novo Nordisk is the biggest loser in terms of the points performance story. Seems to be a day in, day out kind of positive, negative story for Novo Nordisk. But you do see some of the other names within that space, Novartis and Roche, both climbing a little bit higher. Astra's also now on the positive picture. But we also see LVMH. I'm not sure there's a clearly defined narrative coming out from the single stock story or the sector story this morning that you can kind of latch onto. Are we getting defensive into the Fed? Are we getting more aggressive into the Fed? I'm not sure there's anything here that really tells us much about how the market is positioned, other than the oil price is a little bit higher, because you got Unilever up, you got Shell up, you got the luxury names a little bit higher as well. I don't know. I'm struggling to find a narrative out of all of that.
Yeah, there's a few individual stock names. We talked about Kingfisher running into the open, and that stock is higher, up by 5.7%. That's on the back of the narrowing of the guidance range. So that's being taken as a positive in terms of the UK consumer market. Maybe that's important. Commerzbank is up by 1.5%. And I mean, we've seen this stock gain a great deal ever since UniCredit got their foothold and then increased their stake in this business. So a fascinating one to watch around German banking consolidation, and a theme we will pick up on later in the programme.
Yeah, UniCredit actually higher 0.6% this morning. Just also picking up on the chip story, of course, Intel making those custom AI chips for Amazon. And we were told by Joe Easton to keep an eye on ASML off the back, and those shares lower 0.25% this morning.
Cool. We're going to talk roof boxes here. Firm favourite of mine. The stock's down quite hard. I can't see a dividend, and I can't see a reason for it in terms of the news coming through either. So we'll look out and try and figure out exactly.
It's almost like Matt Miller's in the room.
What is happening there? I'm not sure Matt Miller is a roof box kind of a person. He would just buy a bigger car.
He spent a lot of time in Germany. I'm sure there was a roof box made its way into the conversation at some point.
Probably true, but I'm sure Matt would just go, you know what, we're just going to go large. We're going to buy a bigger truck and make sure that's going to happen, and we'll get everything in as a result of that. He's always had big dogs as well. Let's talk about how, as we digress, let's talk about what's happening in the markets. Altaf Kassam, EMEA Head of Investment Strategy and Research at State Street, joining us around the table this morning. Good morning.
Good morning.
I'm trying to find a narrative out of the market this morning. I can't. We're waiting for the Fed. We're trying to figure out what's going to be happening there. How do you think asset prices react if we get 50? How do you think asset prices react if we get 25?
I think there will be disappointment if we get 25. It feels like the signalling recently has been more dovish and kind of leaning towards 50. We still think 50 is what we'll get. So I think there will be a mild bit of disappointment. We might see a bit of a rally in the dollar. We might see a bit of a pullback in US equities. But I think the market will digest it pretty quickly and realise that we're on a kind of a trajectory to the end of 2025 and take it in its stride.
Is a positive reaction the right reaction, and is it a knee-jerk reaction? Because the bit that I struggle with in all of this is, if the Fed's cutting by 50, shouldn't I assume that corporate earnings in that kind of scenario should be slowing? And aren't we always told that basically at the basis of the equity story is an earnings picture that we need to pay a great deal of attention to?
You're right, but I mean, the Fed narrative has completely taken hold. But absolutely, when you think about the big picture, say to the end of 2025, what you need to think about is how much is the economy slowing, is inflation under control, and is unemployment picking up too quickly? And those are the factors that all central banks need to balance, really.
Yeah.
And the market is just focusing on one point because they've been told that central banks are data dependent, and it's really hard to get out of this kind of reflexivity loop.
And so how does the dollar respond? I think you nodded to this a moment ago, Altaf. How does the dollar respond then in these various scenarios?
I think if we get 50, that's pretty much what the market's been expecting. We might see a bit further weakness in the dollar, but there's lots of other things holding up the dollar. It's not just about rate differentials. Geopolitical risk means people are more comfortable with the dollar. The US economy being stronger means we'll see more flows or continued flows into the US. So it's not just a rate cut story, but I think if we see 25, we'll see a bit of strengthening in the dollar.
And can and should the retail sales number today influence how the market trades the Fed
it should.
Day later?
It definitely should, and I think it will. I mean, the Fed are obviously right now going to be in session having their discussions, so maybe it won't have that much of an effect on the FOMC themselves, but I think the market, as I said, they've been told central banks are data dependent. They are literally watching every single data point, and they'll factor that in for sure.
Yeah, well, we talked about the potentially outsized reaction to retail sales when it comes to the Fed story. What about the ECB? You know, Christine Lagarde was trying desperately to say, you know, don't focus on individual data points, but can she avoid that volatility around the next CPI print?
Yeah, I think, unfortunately, Christine Lagarde hasn't had a good record of forward guidance, and she kind of started her career with a misstep, and I think the market doesn't have a lot of credence. So I think just as the Fed has told everyone they're data dependent, the market believes that the ECB is data dependent as well. So even though there's been a lot of guidance, and clearly they were very, very clear about their 25 basis point cut last week, the market is still very much in this let's focus on every single bit of data mode, which is why we get a lot of volatility, a lot of extra volatility at the moment.
And if we do see a 50 basis point cut from the Fed, do we see the ECB responding in October?
I don't think it's as simple as that. I think what we've seen is a bit of a break of the link. The ECB moved first, the Bank of England moved first. They didn't wait for the Fed. But I think, you know, obviously currencies are where that transmission mechanism comes out more clearly in rate differentials. And the ECB will be looking at the strength or otherwise of the euro and making sure that it kind of stays in a reasonable range. But apart from that, I think the ECB can move on its own trajectory, but definitely everyone is going in the same direction ultimately.
Do I sell gold on a 25 basis point cut from the Fed? A lot of other asset classes are going to move around this, and I'm wondering where am I going to see the most volatility on the back of the decision we're going to get from the Fed? Which asset classes do you think?
Yeah, I think gold is an interesting one because it's gone up for reasons that no one can really explain, to be honest. People will talk about central bank buying, but
That's
honestly,
very honest of you. Most people are trying to play a narrative.
That often seems to apply to gold, I think.
Yeah, gold is the hardest commodity or a security to explain. I do think, in general, rates come down, real yields come down, gold becomes more attractive. But it's hard to say gold didn't go up for any good reasons. Why should it go up now that rates are being cut? So I think it's just behaving in its own way at the moment.
A lot of idiosyncratic drivers. Let's talk about what might happen with the yen then, because the last time we heard from the BOJ, there was a lot of volatility in the yen, a lot of carry trade unwind, and it's hard to get a sense of just how much of that carry trade still remains in place, although a lot of it unwound, as we hear from various sources. What are you seeing in the yen and the role that the yen is playing, given we're going to be watching really carefully what the Fed does, and we could see quite a lot of volatility in dollar yen, and we know that can have big impacts on other asset classes.
Yeah, the problem with the yen is that the Bank of Japan is probably the worst in terms of forward guidance. They always tend to surprise the market either deliberately or inadvertently. So the yen, I think, is going to be primed for volatility. In terms of the carry trade, when we look at our real money custody accounts, it feels like that's been flattened, even maybe gone a bit the other way. Our customers are slightly long yen. So we don't think there's the potential for a big leveraged unwind like we saw in August. So we think that kind of volatility is gone. But the fact that the Bank of Japan just doesn't, either deliberately or not, do a good job of telling us what they're going to do means that I think there's always going to be volatility in the yen.
Anna was talking earlier about the politics feeding into the Fed decision or not. I wonder in the UK case, because we also have a BOE meeting this week, can we basically ignore Threadneedle Street until after the budget?
I don't think. I think, again, the Bank of England's done a good job of maintaining its independence. We don't think they're going to move, but we don't think that's politically motivated. Clearly, the budget is very important, and it feels like there's going to be a lot of big announcements that are going to come out. But I think the Bank of England, we don't think is going to move, but we don't think that's politically motivated. We think the Fed's 25 basis points, there is an element of not wanting to appear to be influencing the upcoming election.
But then how does the politics play in there? Because we were talking about this earlier. If they don't do 50, and if they have in mind to do a 50 this year, that leaves them doing it in December or in November, which is even closer to the election. So how do they think about the politics?
Yeah, I think that is exactly the decision tree that they have. They don't want to look like they're influencing the election. They might think they need to do 50 basis points at some time, so it's most likely to come in December, when we hope the election results will come out. But as you know, with the US, never say never.
A festive gift.
Yeah.
How big a risk is there that inflation reaccelerates if we start cutting aggressively?
We think that the chance of the big inflation spike like we saw in 2022 is very limited. What we saw then was a massive coincidence of a supply shock, a demand shock, and huge fiscal stimulus, which we don't think is going to be repeated. Clearly, everyone's keeping an eye on inflation, especially services inflation. There's all this wonky theory about owner equivalent rent and how that's being priced in. So there is definitely, the devil is still in the details, but big picture, we don't think that inflation is going to reaccelerate.
So if they don't do this half-point cut today, does it prove, well, if they do it tomorrow, does it prove that the Fed's been behind the curve?
Yeah, I think that's another reason, unfortunately, and it's not economically rational that they wouldn't do a 50 basis points cut tomorrow, because it would be almost an admission that they'd been too late. We think they should have started back in the summer. They hadn't, but we still think that they can get back on track and maybe put a 50 basis point cuts in December.
Altaf, nice to see you.
Thank you very much.
CS. Altaf Kassam, EMEA Head of Investment Strategy and Research, joining us from State Street. This is what the Core 6 looks like this morning. The picture is fairly mixed here in Europe. You've got Novo a little softer, you've got ASML a little bit softer, big focus on tech yesterday in the United States. LVMH looking good, Ferrari's up by a full percentage point this morning, Schneider's looking fairly rosy as well. Defensives, Nestle up by around 0.5%, a lot going on at that business. So that's kind of where we sit at the moment. Generally a front foot story for Europe this morning. There are a few idiosyncratic stories that are worth focusing on. Let's get some single stock moves with Joe Easton.
We are actually seeing some decent moves in some of the companies reporting earnings today, guys. So take a look at Kingfisher. We're up around 6% for the owner of B&Q. UK sales declining less than expected, according to analysts today in the latest half-year period. We're all doing more DIY than expected, according to them. We've also got THG, now this company announcing plans to spin off its retail online business that does B2C trading with other clients in terms of retail. This is the owner of protein shakes, actually seeing a decline in sales, pretty significant, but the demerger, the spin-off of this other business, Ingenuity it's called, is looking like the driver of small gains for that one. Got Essentra down here, a maker of industrial components in the UK as well. Profit warning out of them, down 20%, kind of down in the mid to small caps for Essentra, but a big mover nonetheless. And Anna mentioned Universal on the Dutch market. That one's seeing a bit of a gain. They've got a capital markets day today here in London, and they are saying sales are up around 9%. The Taylor Swift effect continues for that one. Then we'll look at CBK, Commerzbank and UniCredit. Now reports out of Il Messaggero. I've completely butchered that Italian there, but that is an Italian newspaper saying that UniCredit could look to potentially ask the ECB if they can increase their stake in Commerzbank to as much as 30%. That is a pretty positive development if that is confirmed. So we're seeing CBK up 1% at the moment. Then in terms of the UK M&A, Playtech has been rallying in recent weeks because Flutter is buying the company's Italian business called Snaitech. This is in gambling, online gaming, of course. Playtech bought that unit just around 3 or 4 years ago. They're selling it for $2 billion to Flutter. That's confirmed, so those stocks edging high. But Playtech really rallied, I think, around 20% over the past couple of weeks or so. So a decent move on the long term. Then in terms of ratings changes, now it's not just about chocolate. We've got a luxury note today from Exane. Now they upgrade the rating on Hermes. They go outperform on that one. They say that there is a luxury downturn, but the Birkin bags, people love them so much. That one is a defensive stock, according to Exane. So they like that. They downgrade Swatch because they say Swatch over in the watch space is going to continue to suffer from this decline in the luxury space. So that one's slipping slightly thanks to the Exane downgrade. And a quick check on Barry Callebaut. This one is rising more than Lindt today, one of the best performers on the stock 600. We mentioned earlier, now that is not the right stock. It's Domitec Group. It's down 10%, so I'll have to check in on that one. But Barry Callebaut is the one I wanted. I'm going to have to speak to the producer about that. But Barry Callebaut, trust me, take my word for it. It's up 4% because Barclays has upgraded it. Yep. They think cocoa prices are coming down.
Joe, you can probably blame me for that. I apologise, because I want to talk about Domitec Group, because there's a read across into other names this morning here in Europe. We were talking about Thule a little bit earlier on and why it is down. Domitec is out with a warning this morning, and it's having a read across into other stocks in the space. So this company does kind of mobile cooking equipment. It's basically an outdoorsy kind of equipment company. So you're getting a read across into Thule. You may get a read across into some of the US names as well, kind of RV style companies. I guess you probably would classify them as over in the United States a little bit later on. We're trying to work out why Thule was lower. This is the reason. Dometic's numbers this morning reading across into the rest of the sector. Joe, I'm sorry.
So camping and outdoor activities are out. Is that what we take away from this?
It does seem so. We all bought, or maybe all the kit that we needed during kind of the lockdown period, and maybe we're doing less of that going forward. Maybe we're doing other things like buying handbags and other nice things like that.
I certainly am. But, you know, summer's over. Summer's over.
OK, what do we got coming up?
What we have coming up, we're going to talk about the banking sector. UniCredit is set to ask the ECB for authorisation to raise its stake in Commerzbank to 30%. We'll get more details. This is a story in the Messaggero, as we were hearing from Joe. That's what they are reporting, and we will talk about this conversation. What might UniCredit be talking to the ECB about right now? This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
We want the flexibility. Flexibility because as a private investor at the moment, we may go up, we may go down, and we may combine. All the options are on the table.
That was, of course, UniCredit CEO Andrea Orcel speaking to Bloomberg last week. Flexibility seems to be the name of the game for Andrea. UniCredit, we are now understand, set to ask for regulatory permission to build a stake in Commerzbank as high as 30%. Let's get more on what we know about this story. Bloomberg's Tom Metcalf joins us around the table. Tom, he talks about flexibility. This speaks to the idea that he wants flexibility. He's asking for permission to go to 30%.
Yeah, exactly. Speaking to that lovely quote you gave, we could go up, we could go down, or we could do a takeover, right? And this would certainly enable, the extreme end of that spectrum, the takeover, because if you're an ECB bank, what you need to do is ask permission every time you hit 10%, 20%, 30%. UniCredit, quite wisely, going all the way to the top in case they do want to go there. And when they hit 30%, that means they would have to do a mandatory takeover. So it's certainly making it crystal clear that UniCredit are definitely looking at all options, and this takeover, which has got everyone talking about, is something they're certainly looking at.
So this would seem like the logical next step, if you want to give yourself that flexibility, then to go higher, as he already told us in that interview with Francine last week. This seems like the next step. It still doesn't tell us whether we end up with a combined business, does it? Because you say 30% is crucial for that conversation.
Yeah, and there'll be a long way to go there, right? The German government, I think, has 12% left. So even if UniCredit bought all of that, not clear they'd be welcome to do that, then, it'd still be short. Obviously, there's the market as well. But, there's a long way to go. So that's what I'm most keen to see. What is the next move now? Is it something from UniCredit? Are they going to sort of sit and wait and see what happens? Might they increase their stake? Given they're at about 9%, I don't think they can actually go above 10% until they get this ECB permission, because they need that authorization. But yeah, very, very interesting what happens next.
I mean, how does Deutsche Bank play into all of this?
Yeah, I mean, that's the big question. That's what everyone really wants to know. Look, they've come out and publicly been pointing to comments from the CEO that, hey, no, we're focused on ourselves, we're focused on profitability. But look, this creates, if UniCredit took over Commerzbank, that creates a huge, bigger competitor for them in their home market. So that 100%, as we were reporting yesterday, they're looking at all their options also. No one's coming out and saying what they'd do, but,
one of the speculation is, could they, build a blocking stake, for example, if they really wanted to go that.
And who would sell them that blocking stake? Could it be the German government? We're still unclear as to kind of who did what when it comes to the German government.
No, exactly. There's a lot of sort of behind-the-scenes sort of opaqueness in terms of what exactly is being done. Because fact of the matter is, they sold 4.5% to UniCredit. You can't get away from that. Yeah. But we also understand that perhaps they didn't quite maybe see the full picture, or it's maybe now a move they perhaps regret when they kind of have the sort of full implications of what they might have done have sunk in.
So, Tom, we know that Deutsche Bank have been looking closely at this and working out, they clearly don't like it, but they're working out what to do, because this would push them. This would create, if they did see a big merger of the two, UniCredit and Commerzbank, it would be bigger than Deutsche Bank, wouldn't it? So that's, we can see why they wouldn't be happy, but they're still working out what to do. What other ripples is this story having around Europe? Are we seeing other deals coming to the fore, other people talking about where deals might happen? Is this kind of opening the floodgates, or not really?
I like to think so. I mean, one of the things certainly happening is you can bet your bottom dollar that every big bank's boardroom is looking at Commerzbank and just double-checking, well, we've sort of never shown interest in this before, but let's just make sure, because it's now effectively like a live situation. And yeah, we had a story on Friday saying exactly that after a fairly moribund period, something like this, even if it doesn't, go any further than this, has started people thinking, hey, certain things are possible. And while it might not be some gigantic cross-border M&A, I certainly think we'll see, it's all momentum in this business, right? And I think we'll see a few more deals sort of at least speculated on and kind of talked about.
So Rothschild now needs the regulatory nod. What did you make of Christine Lagarde's comments on this in Frankfurt last week? Were you surprised by how welcoming she was of the kind of deal?
I think it makes very much sense as a comment from sort of a technocrat looking at the whole of Europe. But then when you come down to the national level, you can see a lot more sort of, reservations about this. And so I think it makes sense that's the sort of sentiment at the ECB. I'm quite surprised it was expressed so clearly because...
but isn't this a huge opportunity for those that are proponents of the banking union in Europe to push this deal? Aren't we learning, as this starts to unfold, aren't we learning about the reaction function of regulators, governments? And if they are serious about delivering banking union, this is the moment at which they have to make that clear.
No, I think that's absolutely right, and I think we'll see it with this authorisation. So I think the ECB have maybe 60 days to come back, but my sense would be this will get approved because, like you say, what's the message the ECB wants to send? No to any kind of merger, because there's very few that they'd then be able to sort of wade through if this one doesn't go through.
Tom, thank you very much. Thanks for bringing us the latest on Metcalf, all across, of course, the banking M&A stories from wherever they come in the European continent. Quick bit of breaking news also coming from Germany. We see a red headline across the Bloomberg terminal says that the German CDU leader, Friedrich Merz, has sealed the Conservative Chancellor candidacy. So he's the leader of the Conservative CDU, of course, and we had heard yesterday that he may announce his challenge to Olaf Scholz in next year's national election as soon as next week. This seems to be coming a little earlier than we'd anticipated, and of course comes ahead of some regional elections, further regional elections we have taking place this weekend.
Yeah, is the whole thing going to come a little sooner than we originally anticipated? Everything feels very fragile in Germany at the moment.
We'll see how this plays out then. That's the latest newsline coming through on the German elections, which are going to be held in 2025 with, as we know, Olaf Scholz under considerable pressure from the results of those regional elections of late. Coming up on the programme, 25 or 50, we'll get back to that conversation. We'll speak to Virginie Messeneuve, CIO for Equities at Allianz Global Investors. We'll get her view on this week's Fed big decision. This is Bloomberg.
Every single thing I've done It's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Authorities.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
We're in the camp of 25, but you know, I always say we have a crystal ball, and at the end of the day, we'll see what the market does. You know, it may very well be that it doesn't make that much of a difference. There will be 3 cuts of 25, and at the end of the day, what matters is where we are at the end of the year. The total sum of the rate cuts may matter more than how they do it.
That was PIMCO's CEO, of course, Manny Roman there, saying he expects the Fed to cut rates by 25 basis points. For more on the markets, joining us now is Virginie Maisonneuve, CIO for equities at Allianz Global Investors, and Allianz and PIMCO, of course, good friends. Virginie, very nice to have you with us. Thanks for bringing us your perspective. What's at stake for you when it comes to this debate between 25 and 50? What size of cut we get from the Fed tomorrow?
Yeah, I think what's really important is, of course, the fact that we are at a turning point, right? After years of tightening, this turning point is important. From a prudence, if you want, standpoint, I think given what we're seeing, the labor market, a little bit of stickiness on inflation, although we're on the right glide path, if you want, to me it makes sense that we go for 25, right? Because the economy is not very, very weak. I also think that what's important is to understand the relative glide path of inflation and growth between different regions. And as you can see all around the world, in Europe in particular, we've had some cuts, but it's not like we had massive cuts. So I think everybody is sort of conducting or navigating this environment as carefully as they can. And to me, it seems that 25 makes a lot of sense.
Okay, so as we navigate this environment, you're looking for 25, or you think that's what makes sense tomorrow. As global CIO for equities, what do you think equities will be watching for? What will equity market investors be watching for? How will they respond to 25 or 50?
Yeah, so on the 25 bips or 50, I think, the turn is important. And when investors, as you know, markets have sort of rebounded quite nicely. On the news, it's possible we get a pullback. I guess if we had a 50, that would indicate that the broad economic background is weaker, so possibly more negative. But ultimately, what investors would be looking at is the reaction function. So you know that some stocks or some economy will have a faster reaction reaction function to lower rates, particularly if you think countries, if you think Sweden, if you think the UK, for example, versus the US that tends to have a longer impact with, I'm thinking mortgages and long-term rate mortgages. So in terms of specific sectors, you've had, of course, if you think of CapEx, you've had very strong CapEx in the tech space, but other areas have been actually very weak. So you could see possibly a regain of interest in some of those more traditional industrial stocks that might be able to spend again. Small cap, of course, is another area that could benefit from that turn in rate.
Virginie, just to play devil's advocate here, what happens if the Fed is hawkish? What happens if the Fed comes out, cuts 25 today, signals maybe we only get another 25 basis point cut this year, maybe a little bit more, maybe we push towards 75? Should risk assets take that as a sign of strength in the US economy and respond accordingly?
Well, so what that would mean is that the economy is actually stronger than people are expecting currently. So some sectors will benefit, but I would expect if you had that, initially a bit of a pull-off given what markets have done, and then looking at the, once the dust settles, looking at stocks again and seeing where valuations are. We think that in this environment, factors like quality and growth as a style or as factors, if you want, will do well from here on.
What about cyclicals?
Yes. So cyclicals, well, clearly, particularly if you take cyclicals that have not benefited from this CapEx boom that you've had that was mostly tech-related, right? So cyclicals are many, many different parts. Of course, if you put oil in cyclicals, that's managed or influenced by so many other factors. But if you take the industrials kind of cyclicals in particular, I think some of them will react positively to lower rates, but possibly not as negatively as the expectations are now if you have a hawkish message, which would mean that growth is stronger. But what you need to see is actually the investing taking place again.
Virginie, good morning. We've been talking about the politics of the Fed decision. I'm interested in the market reaction to the politics. Our MLive Pulse survey shows that investors think a Harris presidency would be better for stocks and worse for bonds, the opposite for Donald Trump. Does that stack up for you?
I look at politics as an ecosystem factor. And as we know, a Trump win would be more inflationary, more tariff, more disruption on the global supply chain. All of this creates issues for stocks. As I tell the teams, you should really ask every company we meet, what happens? How do you gauge your global supply chain, and can you really adapt very quickly? It's not easy to move from, say, a China to a Vietnam. It's even harder to have the right management team on the ground in new countries to make sure that you can shift a very large part of your supply chain. So I think that's the complexity. I think a Harris president would clearly give us a continuity message. I'm thinking renewable, I'm thinking policy, I'm thinking still, of course, a lot of discussions and bilateral discussions with China and Europe, but something that's more in line with what we've seen, so definitely easier for stocks.
Well, staying on Europe, your optimism about economic resilience extends to Europe, and yet we had, the ECB meeting, the downgrade to the growth outlook, the bias on growth, and yet not on inflation. I wonder why you're so optimistic about European growth.
Well, I think so. First, you have valuation. Second, the resilience comes from the employment picture. So the employment picture is actually still quite positive. And I think in that environment, we're not expecting a very strong growth. And growth in Europe will be weaker than in the US. But you are finding a resilience that supports cheaper stocks and investments in those stocks based on a longer term basis.
Virginie, you've talked a bit this morning about higher CapEx spend, perhaps, as a result of lower interest rates. Tell me a bit more about that, because last time you were with us, you talked about investing in AI enablers and the next wave of productivity enhancements. So where are we going to see this AI trend go next, supported by lower rates?
Yes, so you will see the tech space, of course, as you know, 96% of global tech capex comes from the mega caps, right, the large companies. But I think that over time, as AI becomes more user-friendly, as you have more apps, as you have more tools, you are seeing a propagation, if you want, of the impact of AI on the second and third derivatives, including software. I think that's going to happen. That's going to help with the productivity that we are seeing in companies in many different sectors. And that's the role of, or if you want, the impact of digital Darwinism. But when I talk about capex with lower rates, I think what you'll see is more traditional sectors potentially who have been really, you could say, in a recession capex, right? They've not really invested much, possibly come back. And if you had a Harris presidency and a continuation, if you want, on trades around IRA, for example, perhaps the delivery of the impact of those programs that would hit the economy in the US, but also some important transformation in Europe. As we know, the energy transformation, the renewable transformation, all of this is still happening in Europe, the electrification, et cetera, et cetera. So I think there's potential for upside surprises there.
And indeed, the other outcome of our MLive Pulse survey was that big tech is still going to dominate the S&P at the end of the next president's term, regardless of who's in the White House. Virginie Maisonneuve, CIO for Equities at Allianz Global Investors. Always good to have you. We thank you. But coming up on the programme, Iraq's Prime Minister reaffirms his nation's commitment to OPEC. We're going to bring you more from our exclusive conversation next. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that you know most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Tuesday session, 42 minutes, 43 minutes old. Let's talk about where we are. We're pricing in a little bit of upside from the United States back into our European markets here this morning. We're up by, let's call it 0.4%. We are seeing a little bit of outperformance, but generally I think we're up by, let's call it 0.4%. In terms of the sector story, retail is outperforming this morning, which is interesting as we prepare to go to retail sales over in the United States. Elsewhere, more of a defensive bias at the bottom end of the market, but every single sector is in positive territory. Even healthcare, which is the least best performing sector, is up by 0.2%, Lizzie.
Yeah, we're seeing basic resources near the top of the basket. Brent trading 0.2% higher at $72 a barrel. And we can bring you one of our top interviews now on the oil story, in part. Iraq's Prime Minister insisting that his country is fully committed to OPEC, despite not adhering to quotas last month. He sat down for an exclusive interview with Bloomberg's Horizon anchor, Jumana Basechi.
Iraq is an important country in OPEC and OPEC Plus, and we coordinate with our brothers, especially our brothers in the Kingdom of Saudi Arabia. We are committed to voluntary cuts, and there were issues that the brothers understood in terms of the slight increase in production, and Iraq committed to compensating for that, and we began in August of this year. We are committed to the decisions of OPEC and OPEC Plus in a way that protects the price of oil and this balance between the interest of the producers and consumers.
You say that you will start introducing compensations. Where is that going to come from?
We started reducing the domestic production and reducing the exports in a clear way in the oil market.
Can you talk to me about the future of the pipeline from Kurdistan? It's been shut off for several months now. You've talked about the possibility of the resumption of gas going through that pipeline. Can you give us a timeline on it? And also, again, what that would do to your overall production, given what we were just talking about vis-a-vis the OPEC quotas?
Let's understand the problem with the Iraqi-Turkish oil pipeline. The export stopped from Ceyhan after the decision from the International Court in Paris over a lawsuit filed by the former Iraqi governments over exporting oil without SOMO's approval. And then we faced another problem, and that's a legal issue. And they were decisions by the federal court regarding oil contracts in Kurdistan region and the budget law that fixed the average cost of producing a barrel that doesn't surpass $8 for every barrel. Whereas fixed production cost in the oil contracts of oil companies with Kurdistan region is over $26. We are now in front of two options only. We either amend the contracts, which is what the companies dealing with the Kurdistan region had rejected, or we amend the budget law, and this requires political agreement. Iraq is keen to resolve this problem. We are missing the production capacity from this strategic, important line, and we are keen on investing in existing oil and the work of the companies. There are ongoing talks with the companies and with brothers in the Kurdistan region, and we hope to reach a solution based on the legal paths that I mentioned.
Could it happen this year?
Possible.
So that was Iraq's Prime Minister Mohammed Shia al-Sudani, and it was a wide-ranging conversation, not just about oil, brought to us by Jumana Basechi, who joins us now from Dubai. Jumana, he was also talking about the US troops no longer being needed in Iraq now that ISIS has been defeated. I wonder your view from your conversation on the legacy of the war in Iraq.
Yeah, so wide-ranging conversation, and of course, oil was going to come up. It still constitutes 90% of the Iraqi economy, and as we know, Iraq is still the second largest OPEC producer, so they do matter when it comes to adhering to these voluntary cuts. And there's been a lot of focus from the market on the fact that Iraq have historically been overproducing. He says that they are committed to the voluntary cuts that were introduced in 2023 and that they will adhere to the compensation. So let's see what happens in the coming months. It is important for the oil markets. But as you say, we also spoke about the geopolitics of the region as well. And a key feature of the discussion, and this came up and a good part of our conversation, was their ongoing dialogue with the Biden administration vis-a-vis the future of the U.S. and coalition forces that are still deployed in Iraq. There are about 2,500 servicemen and advisors still operating. They were brought back to Iraq in 2014 with the purpose of defeating ISIS. What the Prime Minister told me is that as far as he is concerned, ISIS is no longer the threat it once was, and therefore the justification is no longer there for U.S. to maintain its security presence on the ground. Now, of course, the U.S. perspective is a little bit different. They want to be very cautious about the timing of this withdrawal, given other withdrawals that have taken place over history. Remember, U.S. tried to pull out of Iraq once in 2011. They had to come back in 2014. Afghanistan withdrawal still very much on people's minds as well. So there appears to be ongoing dialogue between the U.S. and Iraq about the future of the U.S. troops stationed there, but he did hint that an announcement could be coming soon.
Right, so the US saying talks are ongoing, and as you say, the presence of those troops goes back to 2013 or 2003 initially. Back on the oil story, Jumana, what was the key message? What matters to oil markets, do you think, from your conversation with him?
Look, I think when you think about the drivers of oil markets from here, and this is something that our opinion economist Javier Blas has been saying, there's been a lot of focus on the demand picture and some of those weaker signals that have been coming through from China, and the fact that the U.S., also the U.S. economy is beginning to show some signs of weakness as well. So that's been one of the main drivers. But we also need to think about supply here, because OPEC have been trying for several months now to curtail supply in the bid to shore up oil prices, to provide some support. And yet, as we saw 2 weeks ago, they had to change the timeline of putting oil barrels back into the market because of concern about where oil prices are headed. They are uncomfortable with Brent sitting closer to $70 than that $80 that was prevailing at the time of that June 1st decision. And so the downward pressure in oil has to feature high in these discussions. And Iraq is very important because they are the second largest producer in OPEC, and they have not been adhering to the quotas introduced by OPEC+. Now, consistently, the oil minister, the prime minister himself said to me that they are committed to these cuts. They will stick to the compensation schedule. Remains to be seen how they're going to be doing that, because they're making a distinction between production versus exports. But ultimately, we do need to think about the supply picture as well, not just the likes of Iraq and Kurdistan that are producing more than their quotas, Kazakhstan that are producing more than their quotas, but also non-OPEC supply. You have a lot of supply coming from the likes of US, Brazil, Guyana as well, and all of those pose headwinds to the oil market.
Jumana, it was a really interesting interview. Thank you very much indeed. Jumana Pasenchi joining us out of Dubai after her recent trip to Baghdad. In a few minutes' time, we are anticipating that we are going to have a press conference. Ursula von der Leyen is going to be outlining the College of Commissioners that she has selected. We've obviously got a lot to discuss still over the next few weeks and months as we watch this parliamentary process unfold. But it's going to be a fascinating day, I think, in terms of setting the agenda for Europe. Bloomberg's Ollie Crook joins us now. Ollie, what are we expecting to hear from Ursula von der Leyen?
Well, listen, Guy, this is a process that really began on June the 10th. And you think about the political terms and what's happened in Europe since then. That is when the vote for the European Parliament took place. So much has happened, right? There was the French election, which was the sort of direct consequence of Macron losing those seats. And what we're seeing now is the culmination of that process, with all of the member states having put forward their names for who they want to put in the respective commissions. And now in the next few minutes, we're going to get from Ursula von der Leyen, A, who is going to get what commissions, but B, actually, maybe even more critically, what will the shape of these commissions be? It's not just going to be all the same ones that we had previously. Remember, the last time they put together a commission was in 2019. It was a very different world. For one thing, you didn't have a war going on in Ukraine and Russia. Could you get a commissioner, for example, on the issue of defense? Another thing that she has made as a sort of really one of the anchor bits of her next commission is this Draghi report. So is there going to be a competitiveness, how to get Europe more competitive, is there going to be a commissioner there? We understand that part of this sort of kerfuffle we had over the last couple of days with Thierry Breton was down to basically giving that to France, now to Séjourné. But the question is, what kind of power does this commissioner have? This is going to be probably one of the executive vice presidents of the European Commission. We're going to get all of this stuff laid down, we hope, in the next 10 minutes or so.
Yes, and there's a lot of balancing interests that Ursula von der Leyen has to satisfy, Ollie. But as you suggest, we could see a situation where we get 3 executive VPs then, and she gives those to the sort of 3 areas of support that she draws on politically within Europe. And so does that mean that 3 commissioners end up sort of more powerful than the rest?
Yeah, well, that's sort of generally the idea. But Anna, we could also get more executive vice presidents, right? This is also something that could be on the table. They could add additional roles. They could tweak additional roles. Just to give you an idea, I mean, look at the number of people we're dealing with here. I mean, this is just, 28 member states, and they're all these different jobs trying to balance not just the different parties, but also the different countries, right? And their weightings within there. And then, of course, there was this question of gender balance. Ursula von der Leyen was very insistent on wanting to get 50-50 in all of the commissions. She basically is going to be unable to do that because the member states didn't put out what she sort of wanted in terms of they wanted commissioners for both men and women. They didn't all do that, right? So this has not been, a smooth sailing process for Ursula von der Leyen so far, but there has been a lot of activity behind the scenes, as we know. Unfortunately, I think for some, it spilled out onto the front lawn of Brussels yesterday with Thierry Breton's resignation. But again, this is sort of all the negotiations that have been going on, the fruits of which we hope to get in the next few minutes.
Ollie, just while we've been on air, we've had the news that the German CDU chairman, Friedrich Merz, is going to be the Conservative candidate for the next national election. You're in Berlin. What do we know about him? What can we expect from him?
Yeah, so Friedrich Merz is the leader, as you say, of the CDU. There's the CDU and the CSU are the 2 sister parties that always sort of work together within Germany. There was some question whether it would be him or Markus Söder, who is the sort of leader down in Bavaria. He seems to have stepped aside, and now it's been confirmed that Friedrich Merz, the leader of the party, will lead the CDU into the next election, which is going to happen at the end of next year. Now, this is coming in a context when we have state elections. We've already had 2 previously. We have another one coming here on Sunday, where we have seen the sort of political establishment in Germany really jostled significantly, with the AfD, the far-right party, winning one of those state elections, being the biggest, most numerous in that parliament for the first time that a far-right party has won since the Second World War. And what we get this weekend is potentially a replay of that. We have the AfD that is polling in the #1 position right now. We've had the Olaf Scholz government trying to make some concessions, which is why they've put those border controls in with all of its land borders in Germany to try to appease some of those voters. The SPD and Scholz is only 3 points behind the AfD. That is going to be a significant vote this weekend, but really all of the attention after that will go into next year, where we're going to see what is going to happen in the sort of general at the federal level, and that is going to be absolutely crucial, where the CDU currently is leading by a significant margin.
Oliver, thank you very much. Bloomberg's Ollie Crook in Berlin with the latest on German politics and the European news that we expect. Just a reminder, we should hear from the European Commission President Ursula von der Leyen shortly. She'll be announcing those portfolios. That's one of the key things we're watching today. We're also looking out for data out of Germany in around an hour's time, and retail sales out of the United States.
Retail sales out of the United States. Is this the final piece of the puzzle in determining whether we go 50 or 25? We'll certainly watch out for that little data set later on. Also, digging below the surface, what is it telling us about where the consumer is, which demos are working, which ones aren't? Is the labour slowdown that we're seeing starting to have an impact? There's a lot I think you can read into these numbers. It's not normally that big a data set, but I think this time round it feels like it is.
Yeah, perhaps an outsized reaction today. You say we've got the ZEW numbers coming up. We have been hearing from the ECB's Simkus just in the past few minutes saying that the likelihood of is questionable whether an October cut is needed. So pouring water on that ahead of the next meeting.
Okay, ahead of the next ECB meeting, we focus in on that and all of the commentary coming through from those ECB policymakers. That is it for the opening trade. European equity markets are gaining this morning. US futures look a little more lackluster, although they have gained since the last, within the last hour, up 0.2 on E-minis this morning. Have a good day, everybody. The Pulse is up next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Traders up their bets on a 50 basis point cut from the Fed as investors count down to tomorrow's decision. Intel announces a multi-billion-dollar deal to make custom AI chips for Amazon while postponing new factories in Germany and Poland. And Iraq's prime minister tells us U.S. troops are not needed in his country anymore. We'll bring you our exclusive conversation with Mohammed Shia al-Sudani. Now, all of that is coming up, but first thing is first, it is a big week for central banks. In fact, it's a bit of a Congo week for central banks. We not only have the Fed tomorrow, before that we get a little bit of U.S. economic data, and actually on the back of that you can see the FTSE, the CAC, the DAX, and also the FTSE Mid gaining quite significantly. If you look at the FTSE, it's actually gaining 0.7%. Look, European stocks again rising as traders are expecting maybe a little bit more from the Federal Reserve than they did just a couple of days ago. Retailers, banking stocks in Europe are actually doing pretty well. Again, moves in some of the other markets maybe a little bit more muted, but this is the eve of the Fed's first rate cuts. And the question is not if they cut, but by how much, 25 or 50. On the back of that, dollar pretty much stable. And then you can see the U.S. 10-year yield at 3.6138. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. European stocks rising, traders looking forward to the final set of U.S. economic data that could determine the size of tomorrow's Fed cut. Joining us now, Eva Sunway, a fund manager at M&G and Venram from Bloomberg MLive. It's exciting. I think it's exciting, right? I don't know if it's a 20 or 50 basis point cut that we'll get, but Eva, what are you expecting markets to do on the back of it?
Yeah, it's fascinating. You know, we've not had such uncertainty in terms of the size of such a move in, I think, 15 years, where markets haven't priced exactly either 25 or 50 basis points. You know, I think the rhetoric and the narrative from the Fed will be almost as important as the move itself. For example, they could still do 25, but then, you know, drive a narrative that future cuts will be more aggressive. I think it would be more palatable in a way for them to start with 50 and then go to 25 rather than the other way around, so that they're not seen as being behind the curve and having to catch up. But yeah, it's a really interesting time in terms of markets not knowing which one's coming.
Yeah, it certainly is. Ven, do you think the Fed is behind the curve?
Well, it does definitely. The fact that we're even having a discussion about a 50 basis point possibility suggests that the Fed ought to have gone with a rate cut in July. And that suggests that they are behind the curve. And there is a bit of panic looking at all the media reports setting up the markets to expect a bigger size move. But the key question for the markets, Francine, is where the terminal rate is. And I think that the markets are kind of too aggressive in pricing the Fed trajectory, which I don't think is going to happen, which I don't think is going to materialize, I beg your pardon.
And so, Ven, why not? We're speaking also from someone, the head of research at JP Morgan, and they're expecting 50 this week, then 50 actually the next time, and then a 25 basis point cut in December. It is quite aggressive.
Extremely, because if you look at the Fed under Powell, one, it's a consensus-driven beast. So that suggests that bringing everyone on board for a 50 basis point initial move seems that the bar is going to be high. The second factor is, if you look at the Fed's hiking cycle back in March 2022, they started with a small move, 25 basis point. By the time they got down to the next meeting, it was 50 basis points, and then it was followed by 4 back-to-back 75 basis point moves. So the Fed seems to want to start small and go big, and I think that's what I would expect them to do, not the other way around.
Eva, when you look at some of the trajectory going forward, what will support some of the fixed income markets and FX?
Yeah, I think this is going to be crucial for the dollar, for sure. I think markets have sort of accepted over summer a weaker dollar story, and that has obviously buoyed some of your lower yielding currencies in the G10, the Japanese yen being the big one, that having driven a lot of volatility over August. I think going forward, it's important to see whether this is a prolonged weaker dollar story, or actually we're seeing that soft landing materialize, the Fed actually being reasonably successful in loosening conditions while still achieving a reasonably buoyant economy, and actually the dollar remaining reasonably stable from there. So I think it has, multiple implications and definitely sets the tone for other central banks to follow.
What does that mean, Eva, in terms of the entry points for some of the markets? If you look at some of the currency pairings, if you look at some of the treasuries, when's the ideal time to get in?
I mean, I think at the moment what seems more attractive is curve views. If you look at the US Treasury curve, for example, we're still seeing an inverted or very flat curve, and actually positioning at the front end seems reasonably sensible when you consider that whether we get a slowdown story or if we just get more loose monetary conditions, actually the front end seems a reasonable place to be. If you also assume we need more term premium at the back end of the curve, the fiscal story is still looking a little bit bleak at the back end of the curve. So I think there's a lot of entry points at the front end of the curve at this point.
Ven, what's your take on a good entry point when you look at some of the opportunities out there? I think sometimes maybe we forget to really mention China and how difficult the trajectory there could be.
Absolutely. Talking about Treasury still, Francine, I think that the entry point is actually for the front end. We have rallied a whole lot. The 2 years rallied 120, has fallen 120 basis points so far this quarter. That's phenomenal. We have never seen that kind of a drop outside of a systemic distress, i.e. the financial crisis or even the first wave of the pandemic. I think that the markets are kind of run ahead of themselves, and I think that there is scope for a correction just after the Fed. As for China, I think that yields are going to go lower because the economy needs that kind of support. There is over-reliance on the property market, and I think that yields have to adjust lower for the economy to be revived.
I mean, the BOJ will also give us quite a lot of excitement. Eva, what are you expecting?
Well, I mean, we got a lot of excitement over summer. I actually expect this week to be reasonably quiet from the BOJ. There's discussions about October or even, a January future hike. I think they'll likely be reasonably quiet this week, and I think more will rely on the US story and what happens with the dollar in terms of the yen. But, we have just had our most recent wage numbers coming in, and we're still at about 3%. And I think the signs are positive in terms of the continued trajectory of the Bank of Japan needing to continue those rate hikes, understanding that there is a domestic inflation story, a wage pressure story, and actually that looks pretty positive for the yen going forward, less so for JGBs and the government bond curve and equity markets. We know are struggling to absorb the, potentially weak export story. But I think the picture is becoming clearer in Japan, which I think is positive for investors.
Ven, the $1 million trillion question, how much of the carry trade is still left to be unwound?
Sorry, there's some noise going on here. Can I hear that question again? Sorry.
I was asking the difficult question, Ven, about the carry trade and what happens there and how much is there still left to be unwound?
I think there is plenty still to be unwound, because if you look at the yen, I think it is at 140 against the dollar. There is still a lot of carry trade invoiced in there. And I think that in a more reasonable level for the yen, where you would think that the carry trades have been fully unwound, is around 115 to 118 per dollar. And I think that until the yen recovers to that stage, I think there are some still plenty of carry trades to be unwound. And I don't think they've been fully unwound yet. Part of the reason is the market's complacency about the BOJ's trajectory. If you look at OIS markets, they are barely pricing in any rate hikes from the BOJ, even by June next year, which I think is extreme complacency, which is also reflected in the yen's cheapness.
Eva, I mean, again, if you look at all of that, is market prepared, or could we see big volatility bounce like we had in August?
Well, I think, we're now seeing a bit of a different story in that the yen is still strengthening, but volatility has come down, which I think is a positive thing. I think markets have absorbed, that initial correction, and actually are now just seeing more of a steady trajectory for the yen going forward. Broadly, I think it's a positive thing. And I think the entry points are still attractive. The yen is still cheap on a long-term basis, especially if you look at real effective exchange rates, and compared to other trading partners, we're still seeing an attractive entry point here for the yen. And I think going forward, it's, a positive story.
Okay, a positive story. Ven, talk to me about Bank of England. I mean, when you look at some of the machinations of Bank of England and what we can expect, the UK seems to be in a slightly stronger position than most G7 countries, apart from the US. What does that mean for monetary policy?
I think that the Bank of England, we should expect the Bank of England to perhaps go at a faster rate of rate cuts next year, perhaps not this year, because they are still waiting for good news on services inflation. And tomorrow we get a print where we expect the whisper number is that the services inflation is going to be higher than what the markets are expecting. So I think that, the BOE is going to be cautious heading into the year end. But after next year, after the start of 2025, I think they will loosen policy a lot more. One of the reasons to expect that is that the real policy rate for the BOE is remarkably high, next only to the Fed. So I think that there is plenty of wiggle room for the BOE to cut rates should inflation cooperate, and that should is a big issue.
Eva, how do if you look at gilts versus treasuries, how do they track?
I actually think long-term gilts look pretty attractive at the moment, both on an outright basis and versus US Treasuries. Since we've seen a bit more of a correction in the Treasury curve, we haven't seen such aggressive rallying from the gilt curve. And actually, the gilt curve, especially at the long end, looks relatively steep compared to some of its, competitors. And so actually, I think the entry points for long-term gilts, especially, when you consider the likelihood of the Bank of England perhaps being more dovish than markets pricing, there's room for sterling to potentially weaken. We're likely going to see the end of those upward surprises in UK growth. And so I would expect that picture to start to shift a little. And actually, gilts on a relative basis are looking more attractive.
There you go. Thank you both for joining us. Eva Sonwai, a fund manager at M&G, and Ven Ram from Bloomberg Live. Now, coming up, Intel surges pre-market on news of a deal to make AI chips for Amazon. We'll have the details next, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
So Intel shares have surged in pre-market trading after announcing a deal to make AI chips for Amazon. Well, Bloomberg Daybreak anchor Tom McKenzie is all over the story. Tom, thank you so much for doing it. I mean, this feels like a huge, very significant deal.
It is. Look, you know, we've been reporting on the bad news that's been hitting Intel in recent months as Pat Gelsinger tries to reposition this company and focus on foundries. Now they have this major customer, so absolutely, this is a really big deal. AWS and Intel will be working together on their own customized AI chip. And this was on the back of a three-day board meeting last week, really, really crucial board meeting at Intel, where they were working out how to contend with the cost pressures. We know that they're going to be cutting about 15,000 headcount. They also said, this is really important for Europe as well, that they're going to be pausing the build-out of their factories and foundries in both Germany and Poland. They will keep the ones in the US on track. But this is a really important signal. AWS pairing up with Intel, and it suggests to other potential customers out there that Intel does have the prospects, does have the team, does have the intel to be able to work through on some of these high-end chips. So they will certainly be using this as a sell as they try to keep this program on track.
So, Tom, the other story is basically Microsoft,
Yeah.
you know, giving back to shareholders. Do some of these other companies have to work a little bit harder to keep shareholders happy?
Yeah, look, Microsoft, along with OpenAI, and of course they have that partnership, and NVIDIA has been one of the key winners, of course, of generative AI. So they have the balance sheet that maybe the likes of Pat Gelsinger would envy. They have about $75 billion on their balance sheet, cash and equivalents. So what they're coming out with then is that share buyback, the largest on record, matching the previous record. So in line with that, $60 billion US, upping the dividend as well by 10% on the dividend. So the 10% dividend, so they're getting 83 cents, and that will be kicking in from November versus 75 cents. The stock buyback, about 60 billion. And again, they have this cash balance sheet that allows them to do this, one of the key beneficiaries of the upside that's come through from Gen AI with products like Copilot that they've successfully, at least for now, been selling to their customers.
Yeah. Okay, so Amazon said you can no longer work from home.
Yeah.
I had to take a double take. I was like, people still work from home?
I know, shock horror. For us, this has long been the case, of course, but for Amazon, in the tech world, you know, this has been a point of contention with employees saying, look, we've got this, we've rebalanced our lives around this, we want to be able to work from home at least a couple of days a week. Amazon taking a firm line on this, Andy Jassy saying that we need to get innovation back into the business, we need to act like a startup again. The context is about 1.5 million employees, of course, working for Amazon, the vast majority of whom do not have the luxury of working from home because they work in their warehouses, but about 300,000 to 350,000 office workers will be impacted by this. And again, it's part of Andy Jassy's plans to reinvigorate what he says and get the start back feel back into this business. We'll see if and to what extent employees push back on this.
Yeah, let's see. Success is always difficult to measure in the first couple of weeks when employees actually said, well, no, I've arranged my life this way. Let me stay working from home. Tom, thank you so much. As always, Tom McKenzie there with the main stories, of course, Intel, Microsoft, and Amazon. Coming up, European Commission President Ursula von der Leyen prepares to unveil her new top team. We'll have a look at who's in the running. That's next, and this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
We will only be able to do that if we design a bold industrial strategy with innovation and investment at its heart. So to a certain extent, it's not preserving the old, but via innovation and investment, really embracing the new. We need to boost European cohesion and regions to take everyone along. And for that, we need to support people. We need to develop skills, and all this founded on our excellent social model. Finally, this was a lot looking at the European Union, but of course we have to ensure that Europe can assert its interests and lead in the world, so the external dimension plays also a very important role. And these priorities are reflected in the titles of the executive vice presidents, which I will present in a moment. There's another principle. The treaty says very clearly each member of the college is equal, and each commissioner has an equal responsibility to deliver on our priorities. That means that all commissioners must work together, and it is in this spirit that each executive vice president will also have a portfolio to focus on, for which they will have to work with other commissioners. So in simple words, what affects security also affects the economy, what affects climate or environment also affects people, and vice versa, the business community, and you can go on with that. This is also the reason why this time we do not have the extra layer of vice presidents. So we have a leaner structure and a more interactive and interlinked structure. Another topic is balance in general. Be it gender balance, be it the balance of the different topics, but of course also geography. As you will see, we now have 11 women as candidates for the college that I will present today. That is 40%, a share of 40%. When I received the first nominations, and I looked at the whole pattern and the whole tableau, we were at a point where we had a share of 22% women and 78% men. So you can imagine that this was completely unacceptable. So I worked intensively with the member states, and we were able to improve the share to 40% women and 60% men. And it shows that as much as we have achieved, there is still so much more work to do. And with that in mind, I assigned 6 executive vice presidents. The next slide, please. The 6 executive vice presidents, and actually at the very end you get the overall tableau with all the names and all the portfolios. So you'll get it all. 6 executive vice presidents. I assigned 4 women and 2 men. So you recall the share of the college is 40% women, 60% men. We flipped this, and we have as a proposal 6 executive vice presidents, 4 women, 2 men. If you look at the geographical balance, 3 are from member states that joined before the fall of the Iron Curtain. 3 are from member states that joined after Europe was reunited. From the Baltics, the Nordics, and Eastern Europe. We have ministers and prime ministers, very different backgrounds, with one common goal, and that is to make Europe stronger. So, allow me to introduce them, and please the next slide. The first executive vice president will be Teresa Ribera, responsible for a clean, just, and competitive transition. She will also be responsible for the competition policy. So she has the competition portfolio. She will guide the work to ensure that Europe stays on track for its goals set out in the European Green Deal, and that we decarbonize and industrialize our economy at the same time. Next slide, please. Henna Virkkunen will be the Executive Vice President for Tech Sovereignty, Security and Democracy. She will also be responsible for the portfolio of digital and frontier technologies. I will ask Henna to look at the internal and external aspects of security, but also to strengthen the foundations of our democracy, such as the rule of law, and protect it whenever it comes under attack. Next slide, please. Stéphane Séjourné will be the Executive Vice President for Prosperity and Industrial Strategy. He will also be responsible for the industry, SMEs, and the single market portfolio. He will guide the work to put in place the conditions for our companies to thrive, for investment and innovation, to economic stability and trade and economic security. Next slide, please. Kaja Kallas, as you already know, will be our High Representative and Vice President. We are in an era of geostrategic rivalries and instability. Our foreign and security policy must be designed with this reality in mind, and it must be more aligned with our own interests. I know that I can count on her to bring all this together and be the bridge between our internal and our external policies, and to ensure that we have a geopolitical commission. Next slide, please. I'm very happy to entrust the role of Executive Vice President for People, Skills and Preparedness to Roxana Minzatu. She will have the portfolio responsibility for skills, education and quality jobs and social rights. This is under the umbrella of a union of skills and the European Pillar of Social Rights. She will focus on those areas which are crucial to unite our society. Next slide, please. Raffaele Fitto will be the Executive Vice President for Cohesion and Reforms. He will be responsible for the portfolio dealing with cohesion policy, regional development and cities. We will draw on his extensive experience to help modernize and strengthen our cohesion investments and growth policies. This is the team of Executive Vice Presidents, which will work hand in hand with each other and with all commissioners. Next slide, please. I would like to introduce them all to you. So I need the next slide. Yeah, there we are. We go one by one. I I will start here with Maroš Šefčovič. Next slide, please, Maroš Šefčovič. I'm very happy to give him two roles. He will be the Commissioner for Trade and Economic Security. This is a new portfolio, which also includes customs policy. I have also entrusted him with a second role, the Commissioner for Interinstitutional Relations and Transparency, and for this second role, he will report directly to me. Next slide, please. Valdis Dombrovskis will also have a double role. He will be the Commissioner for Economy and Productivity. I have also given him the role of Commissioner for Implementation and Simplification. He will there also report directly to me on this part of his work. Next slide, please. Dubravka Šuica will be the Commissioner for the Mediterranean. I'm entrusting her with this new role. She will also be responsible for the wider southern neighborhood. She will work closely with Kaja Kallas and many other commissioners to develop our shared interests with the region, and she will be responsible for the portfolio of demography. Next slide, please. Oliver Vaheli will be the Commissioner for Health and Animal Welfare. He will be responsible for building a European Health Union and continuing the work of beating cancer and on preventive health. Next slide, please. Wopke Hoekstra will be the Commissioner for Climate, Net Zero and Clean Growth. He will continue to work on implementation and adaptation, on climate diplomacy and decarbonization, and he will also be responsible for taxation. Next slide, please. Andrius Kubilius will be the Commissioner for Defence and Space. He will work on developing the European Defence Union and boosting our investment in industrial capacity. Next slide, please. Marta Kos. It should be noted that the government of Slovenia has suggested Marta Kos as a member of the college. The nomination procedure, which involves the consultation of the National Parliament for a non-binding opinion, is ongoing. She will be Commissioner for Enlargement, also responsible for the Eastern neighborhood, and she will work on supporting Ukraine and continuing the work on reconstruction and support the candidate countries to prepare for their accession. Next slide, please. Josef Sikela will be the Commissioner for International Partnerships. He will lead the important work on our big investment program, Global Gateway, for infrastructure abroad. He will ensure that we develop mutual beneficial partnerships which invest heavily in a common future. Next slide, please. Kostas Kadis will be the Commissioner for Fisheries and Oceans. I count on his experience to help build a resilient, competitive and sustainable sector and present the first European Oceans Pact. Next slide, please.
Well, that was, of course, the EU Commission President Ursula von der Leyen announcing her new European commissioners after a meeting with the presidents of political groups of the European Parliament. Now, it's interesting to see she has the appointment of 6 new executive vice presidents. That means that certain countries will have key portfolios. France, I know there's been a lot of controversy about the French proposal. There's been a lot of copy written on maybe her antipathy on some of the initial proposals, but they seem to be getting a good job. Then everything has to be approved by the Parliament. Valdis Dombrovskis to be EU Commissioner for the Economy, Maroš Šefčovič to be EU Commissioner for Trade. So for more on all of this, to understand exactly what the Commission will do next, some of priorities for Ursula von der Leyen, let's get straight to Bloomberg's Oliver Crook. Ollie, I mean, the key takeaways are what?
Yeah, there's a lot to get through, as you say, Francine, as you suggest. So one of the things that is very critical here is that she's basically changed the entire structure of the commission. She has done away from the vice president roles, which initially the last commission there were 3 executive vice presidents and then a ton of vice presidents. Now there are only executive vice presidents. There are 6 of those now, so they've doubled the number of executive vice presidents. And we'll go through them because they have just named them. That and they're all sort of different than they were previously. So there's one that is on the clean, just, competitive transition. That is going to Ribera. That is going to Spain. And that is basically what is going to contain this competition portfolio, which is something that she's talked a lot about and is very attached to the Draghi report. There is also the executive vice president, as you just mentioned, Stéphane Séjourné, which was all the sort of controversy over the last 24 hours. He is getting the one on prosperity industrial strategy. This is also going to be connected to what Mario Draghi was working with. This also seems to be somewhat similar to the former job of Thierry Breton in terms of the sort of internal single market, but really trying to make the conditions in which for companies to thrive. So I think for the business community, this is going to be a very crucial role. Kaja Kallas is getting foreign affairs. That we already knew. Finland is going to get tech sovereignty. Cohesion and reforms goes to Italy, and then space skills and education to Romania. Those are the executive vice president roles. Now there are other sub roles, and these are influential people, as we know. There's the one on trade, which is going to go to Šefčovič, as you just mentioned. That is a role that will report directly into Ursula von der Leyen. We have also on the economy and productivity, as well as implementation and simplification, which will be sort of very welcome words to much of the business community. That is going to be Dombrovskis, again, going to be reporting directly into Ursula von der Leyen. And then I just found sort of interesting here as the last one, Francine, there's now a Defense and Space Commission, which is obviously something that we've talked about a lot. The last time there was a commission was in 2019. They didn't really have to worry so much about defense as there wasn't a war in Ukraine. That is now going to be headed by the Lithuanians, and this is all going to be sort of front and center when we talk about joint spending for procurement for military gear, all of these sorts of things. And as you mentioned, Francine, this will all now go to the parliament. This needs to get voted on, and Ursula von der Leyen is hoping to bring this new structure into power in November. So just the headlines here. Again, there are no vice presidents anymore. There are now 6 instead of 3 executive vice presidents, and we've just gone through all of the job titles there.
Yeah, I mean, frankly, just putting this together is probably a mess because we know that von der Leyen spent, weeks trying to put this together. You basically have competing demands from political parties, you have the governments, and then you need to make sure that this gets approved internally for the countries, and then, of course, at the whole European Parliament level. Ollie, as always, thank you so much for joining us. Oliver Crook there with the very latest on some of these key roles in this new EU team for Ursula von der Leyen, where we understand that France, Italy, and Spain win some of the most pivotal roles. Now back to the markets, and the dollar steady after a 4-day decline as investors wait for a U.S. retail sales report that may influence the Fed's rate decision tomorrow. Let's discuss all of this with Sonia Martin, head of FX and monetary policy at DZ Bank, and Aline Oyamada, Bloomberg's editor for Europe, FX and rates. Sonia and Aline, thank you so much for joining us. Sonia, let's kick it off with you. I mean, this is a big week. This would be the first cut from the Fed in 5 years. I don't know whether you see some funny positioning ahead of that.
Yes, the market has been speculating massively on how much of a rate cut we're going to get tomorrow. For a while, the market priced in 50 basis points and went back down to 25. Now we're back up to almost 50 basis points. And there's a whopping 120 basis points in rate cuts priced in by the end of the year. So markets are definitely positioned for an aggressive move by the Fed tomorrow. I suspect they're going to be disappointed, but that is what the market is now looking for. So anything less than 50 is going to be a disappointment to many people.
Aline, I guess if they do 50 basis points, I mean, is it an admission that they're behind the curve?
Well, I think some might see it that way, but for the Fed, it will be kind of front-loading that pace and trying to show they are not late to this party. So I think at this point, it's much of a psychological game. Like if we do 50 now, will the market expect 50 and 50 and 50 toward the end of the year, which maybe is not that desirable for policymakers. But yeah, with the market so split, that means that any way we go, we'll have a big market reaction, right?
Yeah, I mean, we are expecting quite a big market reaction. Sonia, when you look at, I mean, why do you think the market is ahead of themselves? There is, this being priced in not only 50 this week, but 50 possibly in October, and then even 25 in December. I mean, that's a lot of tightening in a very short amount of space.
Yes, that is a big move for the Fed, and I don't think it's going to happen, and I don't think it's necessary. I mean, I think what's happened is that the market sort of jumped the gun on the whole recession story in the U.S. I mean, the economy is finally slowing down. I mean, this is what the Fed was working towards for a long time, and it took much longer to happen than expected. But now finally we have to slow down. That's what we wanted. We wanted the labor market to cool, inflation to come down. It's happening. The Fed can cut rates. But we're not in a recession, and the Fed doesn't expect a recession. So there's no reason to jump the gun and do 120 basis points by the end of the year. I actually think that if the Fed did suggest that they're about to do that, that would create more uncertainty in the market, and I think that's not what the Fed would want to risk doing.
Yeah, but there are worries, Alina, for example, about the labor market, right, which is partly the reason why we think they're loosening by so much. Is there a concern that actually the markets have forgotten about inflation? I mean, there's always a possibility that inflation comes back up. And so we have this environment where actually the Fed, if not panic, needs to reverse course quite quickly.
Yeah, I think inflation is always a risk, but at this very point, everyone is very confident that the direction of travel for inflation is downwards, and that game is kind of won. So they're focusing on the labor market, which has been a bigger market driver for that specific reason. And the whole debate is really, does the labor market really calls for a big cut now? Or, like Sonia said, we are not yet in a recession, so we can afford a smaller cut now and see how it goes, right?
Where do you see, Sonia, the biggest opportunities in terms of markets right now?
Well, I do think, when I look at euro-dollar, for example, I do think at the levels that we have been trading at recently, sort of 111, 112, I think the euro is definitely too high. The dollar is, I think, a bit too weak here. So I think there is a chance here we're gonna see a correction. I'm not convinced, to be honest, though, that would happen tomorrow, even if the Fed only does 25. I have this feeling that sentiment is very negative towards the US right now, and I think even if the Fed only does 25, the market isn't gonna immediately go with its expectation that more bigger cuts are gonna come. And I think we're gonna need some fundamental data to, especially as Aline just said, because of the labor market. So what we'll need to see is that the labor market isn't about to fall off a cliff. You know, we haven't seen, people aren't being fired. I mean, the labor market has relaxed a bit, and there's definitely a change there, but it's not as I think as dramatic as the market fears. And I think we're going to need to see evidence, and I think we can see quite a correction in dollar sentiment at this point, and therefore the dollar as well.
So, Sonia, what's your take on BOJ? Again, there's I guess, quite a lot of anxiousness because of what happened early August when it comes to BOJ, but also unwinding of the carry trade.
Well, we're looking for more rate hikes, but not now. I think at the moment, probably more towards the end of the year, December. If they're very, very hawkish on Friday, then that might change. We might have to push forward the timeline. But I think they'll tread carefully also because the yen has appreciated quite a lot. It's causing some concern within Japan, export sector, etc. We've heard some voices there, discussing the appreciation of the yen and the speed at which it's happened as a problem factor. So they'll want to tread carefully, but they are obviously on course to hike rates further. They've made that very clear.
All right, thank you both for joining us. Sonia Martin there from DZ Bank and Bloomberg's Aline Oyamada. It's going to be a busy week. It's going to be a fun week, right, Aline?
Absolutely.
Very fun. Coming up, Iraq's prime minister tells Bloomberg that U.S. troops are no longer needed in his country. We'll have more from our exclusive interview with him next, and this is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Rain World Cup. This is a three.
As the economic picture
Covering the intersections of Hollywood, Silicon Valley, and beyond.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
بدأت حكومتي ببرنامج حكومي.
My government started a government-run program that was proposed to Parliament and put to a vote after the ministerial cabinet presented it. This was according to the constitutional measures. Part of the ministerial program was ending the coalition's mission after the justifications for its presence had ended. Today, Iraq in 2024 is not the same as Iraq of 2014. We have defeated Daesh with our sacrifices and the Iraqi people's position from all of its components and factions, and with the support of the international community and friends, and we do appreciate that. We found that the justifications ended, and there is no longer a need for a coalition of 86 countries. We moved from a period of wars to a period of stability. Daesh doesn't pose a threat to the state. It may be part of the security challenges like drug trade and criminal offenses. It's at that level. It's not equal to Daesh now. A group of terrified people hiding in caves, in the desert, in the mountains, and a real threat to security and stability. Based on this vision and evaluation, we initiated a conversation with our friends in the international coalition, and it was honest and included more discussions on various levels and was culminated with my visit to Washington, D.C. and talking to President Biden. We formed a joint committee in August of 2023 between military commanders to start the conversation, and in fact, the committee reached an understanding to arrange for that withdrawal. It was hoped that the conclusion would be announced, but out of our keenness not to mix things or create a misunderstanding about the end of the coalition's mission, the desire was to postpone the announcement, and we hope to announce it soon. And we will take part in an international conference for the coalition against Daesh or terrorism, and Iraq is a genuine member that lead the ranks to face terrorism. Ending the coalition's mission, and this is an important point, does not mean a breakdown between Iraq and the coalition countries, including the United States. On the contrary, at the same time, we are in bilateral talks to build a sustainable security relationship other than the economic, cultural, and scientific and social ties.
You say that ISIS is less of a threat, and yet on Friday, CENTCOM announced that a raid was conducted in western Iraq. U.S. military, alongside Iraqi security officials, killed some senior ISIS commanders. That tells me that the ISIS threat is still there.
Of course, this was one of the quality operations that was executed between security agencies and the international coalition. This is proof that Daesh, or this is proof that the security agencies have reached a phase of capability where they started finding these people in caves, in mountains, in deserted areas, and kill them. This is proof of the level of ability and capability that our security forces have reached. Daesh today doesn't own a land or an area to be in and has lost its incubator, and this is the fundamental win achieved. Following up on the cells of these individuals doesn't mean that there is a real threat. When we used to talk about Daesh, Daesh used to hold areas, villages, and cities. And today, Daesh doesn't have this existence except for these isolated groupings in deserted areas.
There's a U.S. presidential election coming up very soon. What would you like to see out of the next U.S. president, be it President Harris or President Trump?
Of course, we respect the choice of the American people according to the democratic process. We will deal with any administration that gains confidence. It's of interest to us to activate the strategic framework that was signed in 2008 and building a relationship based on these principles of mutual interests and respecting Iraqi sovereignty.
Well, that was the Iraqi Prime Minister Mohammed Shia al-Sudani speaking to Bloomberg's Jumana Bersace. Coming up, Bloomberg understands that UniCredit Chief Executive Andrea Orcel is seeking ECB permission to build a bigger stake in Commerzbank. We'll have all of the details, and this is Bloomberg.
What's happening on Wall Street?
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back, everyone. Now, UniCredit is set to ask for regulatory permission to build a stake of up to 30% in Commerzbank as chief executive Andrea Orcel pursues a possible takeover of the bank. Well, Bloomberg understands that the Italian lender will likely file the application to the ECB as soon as the next few days. So let's discuss all of this with Paul Davies from Bloomberg Opinion. Paul, you've been writing some really great columns trying to basically pick out, what happens next, why there's rationale for this merger to take place. What does happen next? I mean, is 30%, is it all or nothing that Orcel wants?
No, I think they're just giving themselves room and flexibility to buy shares opportunistically as they come up, either on the market or in the next round of sell down by the German government. I mean, we know from your interview with Andrea last week that he is keen to kind of, explore anything he can in terms of the opportunities here. So it might end up going, fairly high fairly quickly, or they might sit on their hands and wait and see what happens with the price and see what else unfolds within Germany.
Within Germany is the key there. Does Deutsche Bank come in?
Well, they're obviously thinking about it. There's been a few stories about this around. I mean, they have to think about it, right? It's like it's somebody's going to create between HVB and Commerzbank, a major competitor to Deutsche within Germany, possibly even larger than Deutsche itself on the ground in Germany. Personally, I don't think Deutsche should get involved. I don't think they should try and buy Commerzbank. They've had incredible difficulty trying to integrate Postbank over a very long time. The analyst from Citigroup had a really good note out this morning talking about how the cost of capital for Deutsche would be higher than it would be for UniCredit, so they wouldn't get as good a return. And also the overlap in the branches is much, much greater. So you would see many more closures, probably a lot more redundancies and staff cuts if Deutsche took over than if UniCredit did. And that's not going to go down well politically in Germany either, despite the fact that unemployment is very low. And if you're ever going to do this sort of thing, now's maybe the time to do it.
Okay, a million more questions about what the politicians are thinking, so we'll have to get you back on, Paul. Thank you so much, Paul Davies there from Bloomberg Opinion. Now, in the last 30 minutes, we also have a new team that's being proposed for Ursula von der Leyen. The EU Commission President has announced her new European commissioners. Now, remember, they still need to actually be approved by the European Parliament, and it's extremely tricky situation. I mean, she probably spent weeks balancing some of these competing demands from political parties, the member states, as she tried to put together this team of nominees, but also new portfolios that would pass muster with governments and survive the scrutiny of the European Parliament. It does seem at first glance some of the key roles: Teresa Ribera, Spain's climate minister, who will oversee the digital and energy transition, including antitrust portfolios, Italy's European minister, and also France has been doing quite well, with the outgoing foreign minister set to be its nominee to replace the EU Internal Markets chief, Thierry Breton. Up next, to Bloomberg Brief, Danny Berger in New York, and this is Bloomberg.
First of all, global trade, which had adverse consequences that we're learning about to this day, still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Good morning from our global headquarters in New York. I'm Danny Berger. Manish Cranny is on assignment today. Welcome to Bloomberg Brief. Let's set your agenda. The last piece of data, retail sales are due for a market pricing in near even odds of a half-point cut. A chips redemption, Intel scores a deal with Amazon to make custom AI semiconductors. And Microsoft boosts its dividend, unveiling a fresh $60 billion buyback program. Well, the debate continues. I think a lot of us will be happy when Wednesday's decision is over, done and dusted, and we can decide whether it's 25 or 50. For now, this market is pricing in just over 50% odds that we do get a 50 basis point cut. So you see a 2-year that this morning basically is unchanged. Continued to decline yesterday at a new 2-year low. We're at 3.54% on your 2-year yield. The 10-year yield, that moved lower again yesterday too. That is trading at about its lowest since 2023, around summer of 2023. We're going to get retail sales data today. Will it be the most important retail sales data that we've ever seen before? Will this tip the scales one way or another? Paul Donovan at UBS says it shouldn't. That one data point shouldn't matter if this is a well-rounded and well-informed Fed. Nonetheless, that comes at 8:30 a.m. The expectation for retail sales is a decline of 0.2% month over month. S&P 500 futures, those had higher this morning, up 0.2%. You've seen this rotation happen underneath the surface, where small caps have been doing better. This morning, though, small caps are still up, but tech is doing better. Microsoft, a story there, and Intel. Will cover that throughout the show. Meanwhile, dollar versus the yen, little change this morning, just above 140. Well, Laura,
let's talk about more on the benefits of open source AI. So another thing you mentioned in your letter is that open source AI can accelerate innovation and economic growth. How is this already happening, and how do you see this happening more in the future?
Yeah, I mean, I think that there's a version of this which AI will do no matter how it's developed. And then there's a version of this that I think benefits from open source specifically. So I think that AI has more potential than any other single technology that's being developed right now to increase productivity, accelerate the economy, make it so that kind of every person has the ability to be more creative and produce more interesting things. And I think that that's all going to be great. I also think, I hope that it'll help out with science and medical research and things like that. There are a lot of folks today, though, who don't necessarily have access to the ability to fine-tune or build their own state-of-the-art models. So they're sort of limited to what these large labs do. And like I just said, I think one of the defining aspects of our culture around innovation as a sort of a country or society is like, it's not just big companies that do it, right? There's all these startups and hackers and academics and people in university. And I think you want to give all of those folks access to state-of-the-art models that they can build on top of. Not just that they can run, which is what they have today with the closed vendors, but that they can build on top of and tweak and distill down to smaller models that they can run on their laptop or their phone or whatever other device they're building. And I think that that's just going to unlock a ton of progress. There's also a version of this where you can look at it by nation too. So it's not just that startups might not have the resources or universities might not have the resources to go train their own, large-scale foundation models now or in the future, but there are a lot of countries that aren't going to have the ability to do that because, pretty soon these things are going to cost many billions of dollars to train, and I think that having the ability for different countries and entrepreneurs in different countries and businesses to use it to serve people better and just do better work is going to be something that basically lifts all boats around the world and just has a massive kind of equalizing effect. So I think that that's really positive. And, that's one of the places where we get the most thanks for this is not actually the tech community, but it's like different developing countries or other countries that want to have access to the technology and do stuff with it, but wouldn't necessarily have the tech field themselves to produce something that is state of the art that their businesses can build on top of. But once they have it, it's actually pretty easy to go train your own thing. So that's a pretty neat part of this.
There's a lot to chew on in the Fed meeting coming out on Wednesday.
Yeah. That is maybe even an understatement, Laura. Andrew Lapthorne from SocGen gets at something that you're kind of mentioning there, this idea of a contradictory message, of 200 cuts priced in, of an expectation, a little bit more so now that they start at 50, and yet an equity market that continues to trend higher. Is it a contradiction to have an equity market that is little pricing in anything other than a soft landing, and a bond market which expects an aggressive rate cutting cycle?
Well, this has really been a divergent story for quite some time, the fact that the bond market is pricing in that hard landing, whereas if we look at what's happening in equity markets, it's really priced for this so-called immaculate inflationary backdrop. And I think one of those eventually will have to give. The way we're viewing it, we still do like equities. It's about being very selective, taking defensive approaches, really kind of staying away from those consumer cyclicals that could be exposed to a deterioration in the economic backdrop. And then on the bond market, there are ample opportunities given we still have this environment of elevated real yields. And so in our environment, we're really looking at playing kind of the short end, the belly of the curve in the US Treasuries quite tactically, and then maybe taking a bit of an up in quality approach in some of those higher yielding credit opportunities. So this is, despite kind of the different narratives, there's ample opportunities for investors.
Just describe that short end call, Laura, because as you say, it seems like the bond market has gone a little bit too far. It is going to be 25 and not 50. So what are you doing exactly?
Well, I think the front end is probably going to be a bit more anchored. Yes, we have the 2-year yield trading around that kind of 2-year low. There is scope for some of that near-term aggressive pricing from the Fed to be priced out if they do go 25 basis points. But I think markets will be reluctant to price out the potential for 50 basis point cuts further out. We've heard from Fed commentary, it's really going to be dependent on the evolution of economic data. We are seeing that softness come through. So perhaps we do have volatility in the front end, but not a material kind of retracing of the rally. Instead, I would suspect that we're going to continue to see that curve steepening come through in the U.S.
Yeah, Bank of America just out with their investor survey saying that curve steepening is one of the most consensus trades right now, which maybe is welcome news for people, Laura, because so many people thought it would happen to start the year, and it didn't, and now here we are. One of the other things that has been somewhat washed out of the market is a yen carry trade. The BIS had a really interesting quarterly paper out today, Laura, saying that it's not over. They did some fancy econometrics that are above my pay grade, but basically came to the conclusion that it's not all washed out yet. In a week where we have both a Fed decision and a BOA decision, how much is that on your mind?
I think the Bank of Japan is certainly going to be on the radar once we have that clarity from the Fed on Wednesday. And I think it's going to be a fine balancing act for the Bank of Japan. On the one hand, we want to know their assessment of the current inflationary backdrop. After recent upside surprises, we do have strong wage growth coming through, which does suggest this inflation trend is becoming more entrenched. But yet, we've known from the lessons from the last couple of meetings, they're going to want to assess market jitters. They don't necessarily want to spook markets the way they had previously. Now, when it comes specifically to the yen, we've seen this material appreciation, and I think that probably has run its course. Yes, there's maybe a little bit more scope to the strength side, but if we think about, the Japanese yen doesn't necessarily have to rally on a USD rate cut, and I think that's largely because if we think about, growth dynamics matter. U.S. growth, so long as that continues to persist, we're unlikely to see that repatriation back into Japan. And as well, a lot of that outflow from Japan that we've seen has been from sticky, like life insurers. So they're going to be less vulnerable to some of those near-term moves. So at this point, I think the yen against the dollar is probably going to trade a little bit more sideways. Key risk, though, is if we see the U.S. recession materialize, then we could see some of those aggressive Fed cuts come through, at which point USD yen could trade closer to that 130 mark. It's not our base case, but certainly there are going to be corners of risk in these markets that not only policymakers but investors have to be quite acute to.
Laura, I really look forward to catching up again after this week when we finally have some answers. Laura Cooper of Nuveen, thanks for joining this morning. Okay, let's get to some other top stories that are trending on the terminal. Amazon is going through a shakeup. CEO Andy Jassy is streamlining the company by cutting management layers and ordering employees to return to 5 days a week in the office. In a memo to employees, Jassy said that he wants Amazon to operate like the world's largest startup. Chinese automaker BYD is taking full control of a joint venture that it had in China with Mercedes. The deal was announced without a value in a statement late on Monday. The move comes as more foreign automakers dial back their exposure to the world's biggest auto market. And the European Commission president proposed a sweeping financial and industrial portfolio for France in her next commission after a dramatic late-minute switch in nominees. As well as France, Italy, and Spain won key roles for the bloc. The EU is under pressure to respond to growing industrial challenges from the U.S. as it digests the Draghi report outlining them. Coming up, Intel surges pre-market, news of a deal to make AI chips for Amazon. Well, the details on that 7% rally. And Kevin Monapenyan in Walsh Asset Management bets on a gradual approach to easing from the Fed, much like Laura Cooper. We continue the debate later this hour. It's Bloomberg Brief.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
It's your Bloomberg Brief. I'm Danny Berger in New York. It's a win for Intel, a rare win these days. The chip maker has landed Amazon's AWS as a customer to co-invest in a custom semiconductor for AI computing in a multi-year, multi-billion-dollar framework. All of that coming from a statement released yesterday. CEO Pat Gelsinger is saying this in an interview. This announcement is big. This is a very discerning customer who has very sophisticated design capabilities. For more, let's cross over to Bloomberg Daybreak Europe anchor Tom McKenzie, who's been tracking this. Tom, I mean, it's been a tough stretch for Intel. Their shares are down something like 60% year to date.
Yeah.
Does this represent confidence and maybe something turning around for them?
Well, look, it's undoubtedly, Danny, to your point, a vote of confidence in Intel and its ability, the company's ability to design, not only design, but also manufacture and produce AI chips, of course, where they have struggled, notably, hence the downturn in the stock. The competitive threat, of course, of NVIDIA, of course, taking the front foot on this. It shows that at least AWS thinks they have the competency at Intel to partner with them, co-invest, again, for a multi-year, and as you said, multi-billion dollar project or framework. So yes, it's a vote of confidence. It comes after this crucial board meeting, of course, at Intel's HQ last week. More details as well coming through on the back of that. They're going to be suspending the factory build-out, importantly for Europe, in Germany and Poland. They have also announced they managed to secure about $3 billion, potentially up to $3 billion in financing from the US government to build out chips for military uses. So that's another tick in the box as well. The factory and foundry build-out in the US continues across those different states. And of course, all of this coming on the back of announcements around a 15,000 job cut across the business going forward to try and save around $10 billion US. But the deal and the cooperation partnership with AWS is absolutely a vote of confidence. And Paul Gensler rightly touting it. And of course, he'll hope that other big corporate players and corporate clients get on board as well.
Speaking of a vote of confidence, Microsoft certainly gave themselves one, returning a lot of capital to shareholders. What are the details of it?
So $60 billion in terms of the buyback, so matching a previous record, upping the dividend by 10% as well to 83 cents versus 75 cents in terms of the dividend. So big buyback, dividend increased, and it's a reminder that this is a company that sits on a lot of cash. By the last account, the numbers that came through in June, they were sitting on cash and equivalents of about 75 billion US dollars, because this company, unlike up until this point Intel, Microsoft has actually really benefited, of course, with its partnership with OpenAI in getting that front foot around generative AI, and they are starting to see that monetized on products like Copilot. They have that balance sheet, they're returning some of that now to their investors, and they look like they're going to be rewarded for that at the opening with the pricing that we're seeing right now.
Just to wrap this up, Tom, geopolitics are never far from a chip story. The FT has a story this morning that the US and Japan are nearing a deal to curb chip tech exports to China. I feel like I've asked you about some version of the story, maybe every other week over the past year. What is the latest?
Yeah, so it's evolving, and as you've said, this is reporting from the Financial Times, specifically Japan and the US are getting closer to agreeing coordinated action in terms of restrictions of technology, the hardware, the software, into the Chinese market. There's a countdown now to the election in November. The reporting from the Financial Times saying the US wants to get a deal with the Netherlands and Japan to ensure that they can collaborate before additional measures are put in place by the US. So essentially that you can carve out Japan and the Netherlands from that because they've already agreed to restrictions. The background is US companies cannot send their employees onto the ground in China to service the equipment. Japan, the likes of Tokyo, Electron, ASML in the Netherlands still can. The US wants to stop that, and they want to make sure that their allies are on board before they push through additional restrictions ahead of the US elections in November.
Tom, we appreciate it as always. Tom McKenzie there, who you can catch at 6 a.m. UK time on Daybreak Europe. Okay, coming up, resetting the narrative, how the former president plans to turn his second assassination attempt into political momentum. This is Bloomberg.
do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
The Secret Service for the expert handling of the situation. And the former president is protected from harm and the subject is in custody. Let me just say, there is no, and I mean this from the bottom of my heart, those of you who know me, many of you do, no place in political violence for political violence in America. None. Zero. Never.
That was President Biden speaking on the assassination attempt on former President Trump. Now, at the same time, you have Trump trying to portray a message saying that it is the Democratic rhetoric which has put my life at risk. As far as the Democrats go, the language has been meetings with Teamsters, Harris meeting with them, an endorsement still dangling, maybe some frustration there that they haven't yet endorsed them. Okay, let's take a pause on the politics for just a moment. At 5:20 in the morning, we are waiting for retail sales. That comes at 8:30 a.m. Eastern. Is this going to be the most important retail sales data that we have yet to see? S&P 500 futures up 0.33%. The dollar little changed. Your 10-year little change this morning. We are awaiting. Now, politics has not been changing this market. Let us be clear, even though it vastly did after the first assassination attempt on the former president's life. So now the Republican nominee is trying to gain back some of that momentum that he's lost since Vice President Harris became the Democratic nominee. Joining us now is Bloomberg's Derek Wallbank. Derek, Trump has been using this language saying, it is them, it is the rhetoric that has put my life in danger, trying to do a shift like we saw earlier in months prior that saw the end of President Biden's presidential campaign. How should we judge the success of Trump trying to change the momentum this time?
Well, I think first off, Danny, it's going to be a little bit tricky because some of the rhetoric that Donald Trump is accusing or faulting the other side for, he and his vice presidential candidate have either used very similar words, very similar phrases, or in the case of Vance and Trump particularly, they're facing their own sort of questions about rhetoric that they're using to describe situations ongoing with migrants in Ohio, right? The dogs and cats and all of that scenario. It doesn't bear witness to go into all of that too much at this moment. The key point is, though, it's not necessarily landing as much this time as the last time.
there is a fear, there is a real fear, I do think, that there may become a normalcy or a desensitization to some of the things that we're talking about. Now, to be clear, the idea of someone showing up at the golf course that the former president is playing on with high-powered firearms and all of that, that's a very scary situation. You know, we are less than 2 months out before Election Day, and it's a very tight race. And you know, as President Biden said, there's no place for that in American society.
Yeah.
But here we are in this unprecedented election year, and we're starting to see this now again.
Derek, we're going to have to end it there. Thank you so much for joining this morning. That is Bloomberg's Derek Wallbank. Now, the race for the White House is also being closely watched around the world, including the Middle East, where tensions remain high. Bloomberg's Jomana Bersecci spoke exclusively with the Iraqi Prime Minister. Take a listen.
Our understanding of the situation of the relationship between Iraq and Iran is based on mutual interests and mutual respect. Iran is a neighboring country, and we share 1,400 kilometers, and it's in our interest to have a close relationship, especially that Iran has been supportive of the political process and our efforts in combating terrorism. Of course, Iraq is the only country in the region that has a special relationship between Iran and the United States, and we try through this positive characteristic to help in bringing opinions closer. And we are interested to have stability in the region, away from the Axis policy. We don't want the tense relationships and the stances of other countries of the world to impact the Iraqi situation. This is our diplomatic effort and movement in terms of our bilateral and regional ties.
That was the Iraqi Prime Minister speaking to Bloomberg's Jomana Bersecci in an exclusive interview. More on the Fed to come. It's your brief.
always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Manish Cranny is on assignment. Let's set your agenda. A test for the 50 camp. Markets await the latest retail sales data that could pull back bets on a half-point Fed cut. A chip redemption. Intel scores a deal with Amazon to make custom AI semiconductors. And Microsoft boosts its dividend, unveiling a fresh $60 billion buyback program. Well, plenty to cheer about for tech this morning, but it really has been the small caps, this rotation that's been happening over bets of a 50 basis point cut. We are about even odds this morning about whether we go 50 or 25, but the speculation of 50 over reports and different outlets, over Bill Dudley's recent Bloomberg opinion column has meant that two-year yields are trading at their lowest in 2 years. Little change this morning, again, waiting for that retail sales data. S&P 500 up 1/3%. Yesterday, again, it was all about small caps and the rest of the market joining in. Even though tech had a worse day, that means an equal weighted measure of the S&P 500 hit a new all-time high yesterday. Meanwhile, sort of in the theme of just waiting, seeing what's going to happen today, Japanese yen, little change, just at 140. So it's the last piece of data. With a data-dependent Fed, retail sales comes out at 8:30 a.m. Joining us on what to expect is Bloomberg's Jill Desis. Jill, what are we expecting today?
Yeah, well, Danny, I don't think I've ever seen this much attention paid to a set of retail sales data ahead of the Fed meeting, but I think just really telling you there, how much that coin flip bet on 25 versus 50 basis points is really feeding into some of these things. So, look, what we're really expecting out of this data set is probably a fall of about 0.1% for that overall number, likely dragged down a bit by car sales. That would be a bit of a reversal from what we saw, a sharp uptick in July, but the Fed is probably just going to see this as, kind of a trend back toward a bit of moderation. If you exclude, auto sales, other things from the control group, which will exclude also like, more volatile costs like building materials and food, probably seeing a little bit of a better, more steady, growth there. But ultimately, Danny, I think it really just kind of, shows us that, yes, the Fed is probably going to pick apart just as markets are at every single tiny little piece of data that they can get heading into this decision on Wednesday.
But it's the whole thing of being data dependent, but not data point dependent. I mean, this is one data point, Jill. Does it really have the ability to push the Fed in a direction or end speculation of one cut versus the other?
I don't know, Danny. I feel like, barring anything other than like a really surprisingly strong set of data, I mean, if you just have something that really, really surprises to the upside, and then maybe you're reinforcing the view of some of those inflation hawks like Michelle Bowman, maybe that tips the Fed more toward considering more definitively 25 basis points versus 50 basis points cuts, when it comes around to the Fed decision, it's really difficult to see this moving the needle all that much. I really think at this point, it just symbolizes that the market here, is really sort of craving some more certainty here. I was reading some research that we had put out earlier. I think at this point, right now, we're looking at the greatest amount of doubt in interest rate swap markets for any scheduled U.S. central bank decision since 2007, barring that emergency rate cut in 2020. So, I mean, really, again, just showing you how much, the markets are clamoring for more certainty here. It's kind of unusual that we'd actually head into a Fed decision with this much uncertainty over that 50 versus 25 basis point line. Again, does one set of month of retail sales data give us more definitive proof? I think that you'd have to be looking for a shocker there to give you a full answer.
And probably worth mentioning that in 2007, the credit market had just collapsed, and here we are. Spreads are tight. Everything looks great, and still, we don't know what's going to happen. Bloomberg's Jill Desis, thanks so much. Joining us now to get further into the debates, Kevin Mon, President and CIO at Hennion and Walsh Asset Management. I mean, Kevin, can we just take a step back?
Sure.
What does it say about this moment that we are debating whether retail sales can move the Fed? We're digging through the tea leaves of FT and Wall Street Journal stories about whether it means something, and we just don't know what it's going to happen. What does it mean about this environment that we're in?
All the benefits of Fed transparency, right? It actually has created more uncertainty and more volatility in the markets. I think the Fed is set. Tomorrow will mark the beginning of a gradual easing campaign that will likely last all the way through 2026. Will it be 25 basis points? Will it be 50 basis points? We don't know. We don't have a vote on the FOMC. I believe it's going to be 25 personally. In fact, I think they revert back to their dot plot chart that they had in March and coming into 2024, which showed 325 basis points cuts this year, 325 basis points cuts next year, and another 325 basis points in cuts in 2026, bringing them closer to that rate of 3%. And I think that's going to be the normalized rate where they want to get to. The pace that they get there, we'll have to wait and see. But I think they go 25 basis points tomorrow.
Can I just settle the debate in terms of this? 25 or 50, if you're an asset allocator, doesn't matter.
It really doesn't. Look where we stand right now. Short-term interest rates are at a 22-year high. Even if they do cut rates 3 times by 25 basis points each, we'll still be at a 17-year high. So rates won't be as high, but they will be high from a historical perspective. I really need to see them get about 1 to 1.5% lower to have any meaningful impact on the economy. But it does start to free up other areas of the markets that haven't really participated in the rally so far, like small caps. How about a defensive area that we've seen rallying thus far this year, like utilities having its best year in a decade, mostly because of their tie into the AI revolution?
The utilities thing I find so interesting, and Bank of America's investor survey just came out saying that investors are the most long utilities since 2008. You have some really fantastic stats on just how well they've done. Okay, it's defensive, it's AI, it's everything to everybody. At what point do you say this rally has gone too far, or is there enough in this trade to just keep juicing it along for longer?
There's definitely enough in the trade, right? You think of a backdoor play into the AI revolution. All these data centers run hot. They consume massive amounts of electricity, but they can't generate their own electricity. They have to turn to the utilities of the states that they operate within. So look for those utility companies that pay an attractive dividend, that are trading at a reasonable valuation. Right now, the PE in the S&P 500 is around 24. We found 2 names that have a PE below 24. It's names like Sempra Energy, or how about NiSource? And even another like Southern Company, trading a little bit above that PE, but paying a nice 3% dividend yield. These companies provide electricity and natural gas to individuals, to corporations, and to data centers, Danny.
If we, though, get in an environment where, let's say, NVIDIA has a weaker earnings, or some of these hyperscalers, Meta, Google, what have you, say, we're not sure we're going to get that return on our investment, so we're pulling back slightly. How much does that affect utilities? Does this become a whole new risk for them?
It does become a potential risk, but let's just consider this. It's estimated by the end of 2030 that data centers alone will consume up to 10% of our country's electricity grid. We need to solve for that. We need to expand our infrastructure, which creates additional investment opportunities. But I still believe that utilities, even absent the AI revolution, are a nice home for defensive plays. They provide a nice income stream. And they also, when interest rates are lower, provide income capabilities. All of these 3 utilities I just spoke about have a dividend yield of roughly 3%. If we get back down to that normalized rate of around 3%, all of a sudden those utilities look pretty attractive again.
Speaking of dividends, Microsoft upping theirs, a chunky buyback. I mean, yield, all things considered, still relatively low for Microsoft, but you'd expect that for a tech player. With their continued devotion to buybacks, to increasing their dividend, how attractive is Microsoft right now?
As a portfolio manager, it's hard not to like buybacks and dividend increases. And certainly Microsoft was very early to the AI game with their strategic investment in ChatGPT, what they're doing right now with 360, their continued investment into AI. We have to remember, Danny, that AI is a long game. A lot of these investments that are taking place right now, the CapEx spends that are taking place right now, won't pay dividends, pun intended, for quarters, if not years to come. So we need to be patient. But look for those companies that have the balance sheet and also the expertise to stay within the AI game. Microsoft certainly does.
And that's also behind, just from an overall market perspective, of what's enforcing this earnings growth. I was just looking at the forecast this morning, 14% expected in 2025, 10% the following year. Those are still pretty punchy figures. And then going around to where we started, when the trajectory of this economy and how the Fed cuts is unknown. Are we a little bit too optimistic? Again, maybe save for tech, maybe save for AI, that profits can be turned out to those degrees.
It really does depend on the Fed and the pace of their easing. If I think about the retail sales number, that's going to come out around 8:30 Eastern. If that number disappoints significantly to the downside, that just reinforces that the consumer is in trouble, right? The consumer is pulling back on their reins of spending, and the consumer accounts for 70% of our economic growth in the country. The Fed can help with that potential issue by cutting interest rates. I don't think 50 basis points, but if over the course of the next 2 years, they're 2.25% lower, at least on the short end of the curve, that will certainly help.
Well, with consumer companies dealing with that environment, you've seen this really big split. And it's not even just the bifurcation of luxury versus not, it's just who's coping with it well. I don't know if you saw the Amazon bot. Yesterday it was everywhere. It was basically peeling avocados on its own. Everyone was.
I love avocados.
It was called the Autocado, in case you were curious.
Clever.
But so you have these companies trying to cope with, margins coming under pressure, more automation. McDonald's, they're putting in now, you can put cash into their screen so you don't need to deal with the cashier. When you're looking at companies exposed to the consumer, are you seeing things that are attractive? Are you seeing companies that can withstand an environment, even if we get sales data in today that does look particularly weak?
Yeah, let's say for argument's sake, and I'm not saying we're going to have a hard landing, but clearly that's a concern to the Federal Reserve. Why else would they be considering cutting short-term interest rates by 225 basis points over the next few years prior to getting their inflation target back to 2%? Because the over-leveraged states of the U.S. consumer and the federal government, for that matter. How about some consumer staples names? They've been having a pretty good year so far. Even in the event that we do experience a hard landing, people still need to brush their teeth, wash their hair, buy diapers, hopefully. And those types of companies can weather those types of economic slowdowns and periods of market volatility. So consumer staples, healthcare, utilities, good defensive plays, find those companies with strong balance sheets that pay good dividends, and they should be able to provide a nice,
I'm liking this, a barbell, the defensives, and the AI. Kevin,
perfect.
It's so wonderful to have you on. Thank you so much for joining in person this morning. That is Kevin Mon of Hennian & Walsh Asset Management. Okay, coming up, speaking of tech, Intel, it is surging pre-market. A news of a rare win for the company. We're going to give you the details next with those shares higher by more than 7% pre-market.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief on this Tuesday morning. I'm Danny Berger in New York. A much-needed sigh of relief for Intel CEO Pat Gelsinger as the chipmaker lands Amazon as a customer. Intel and AWS will co-invest in a custom semiconductor for AI computing in what they're calling a multi-year, multi-billion-dollar framework. That's according to a statement that they released on Monday. Now, they're trying to navigate through shrinking sales and mounting losses. For more, let's get over to Bloomberg Intelligence senior tech analyst Mandeep Singh. I mean, Mandeep, this comes off the back of Intel postponing new factories in Germany and Poland, trying to right-size their workforce. Is Intel even ready for a project such as this to team up with AWS and get them what they need?
Well, look at it this way. You know, right now, the hyperscalers are the ones who are spending the most on chips. You know, the overall budget for hyperscalers on just AI chips is north of $100 billion, which is why you see that kind of growth in NVIDIA. So in the case of Intel, they just want some orders from these hyperscalers. And I think it's a good start that they have landed Amazon as a customer. Look, Amazon will still have its leading-edge chips made at TSMC, but the fact that they are ready to use Intel Foundry in some capacity, some custom chip, I think it's definitely a good sign.
So what more does Intel need to do then to start building confidence? Well, where are they in this journey?
I mean, they just have to offer proof points that they are catching up when it comes to process nodes. It's not going to happen overnight. That's why it's taken this long. And, you know, landing more hyperscale customers like Amazon would definitely be incrementally positive. And they're doing the right thing by narrowing the scope of their foundry business. So they're not building new plants outside the U.S. And we know things could go wrong when it comes to geopolitical tensions that we are seeing out there. Maybe customers may want to diversify their manufacturing, and that's where I think Intel Foundry still has a chance when it comes to, you know, the diversification play that is there on offer.
Mandeep, elsewhere there was a story that Amazon is trying to also reestablish or reorganize itself, basically cutting out layers of management, trying to streamline things. What does this say about Amazon's growth trajectory and just how bloated the organization has become?
I mean, every company right now is trying to right size, and they probably overhired during the pandemic as well. And what we have seen, the trend is very clear, you know, lean organizations trying to do more in terms of AI. And the way you get those investments is you have to restructure stuff somewhere. So the fact that they're raising their capex, the fact that they're investing big in AI, they have to cut somewhere. And that's what every company, every large company seems to be doing at this point of time.
And then you have, though, on the other side of Microsoft saying, look at all this cash we have. We're going to give out more dividends. We're going to boost our dividends, rather, $60 billion of a buyback. They also announced a new set of tools yesterday, too. Is this Microsoft laying down the gauntlet, saying, look at how invested we are in ourselves and how confident we are with our future?
Absolutely. And look, one of the concerns that investors may have with Microsoft is they are over-investing when it comes to AI capex. And what they are saying is it's not going to have any impact on our dividend return, our buyback plan, and we can still continue to invest. And that's a sign of confidence. They believe that the AI wave will help them generate more free cash flow in the long run. And I think that's what they're signaling here.
Hey, Mandeep, we really appreciate it. That is Bloomberg's Mandeep Singh. Now, another firm revamping its business, BlackRock, the world's largest asset manager, is shaking up its private credit business in an effort to catch up with competitors. Bloomberg's private credit reporter, Silas Brown, joins us now. Silas, I mean, it's BlackRock trying to be everything to everyone. So what does a private credit push look like at the company?
Yes, so look, what they're doing is they're kind of building a new division within BlackRock called the Global Direct Lending Division. It's going to be led by Stefan Caron, who was, up until recently, the European mid-market private debt head, and actually formerly an Olympic swimmer as well, a medal-winning Olympic swimmer. But I think what they're trying to do is trying to make a kind of big push into what's clearly a key growth driver for the firm, and I think broadly private markets as well. Credit is on the rise, and so I think what they're trying to do is kind of streamline and effectively push further into this market.
I love that he was an Olympic swimmer. That is such a good detail. I mean, what is it with these like asset managers and financial firms just hiring athletes? You know, us normal people stand no chance.
He's actually a two-time Olympic medal winner.
Important clarification, Silas. Okay, so I mean, you mentioned, look, they're trying to make this push, but it's not like this is something new. It's not like, you know, the explosion of private credit is just happening. We were calling it the golden era, you know, last year, the year before. So why now? What prompted this move to set up this unit?
Yeah, I think if I was to be a contrarian, I would say that BlackRock, given its scale, should arguably be larger and a larger presence in private markets, and particularly within private credit. I think they manage about 35 billion of direct lending assets at the moment. That is, you know, substantially smaller than the market leaders like Ares and Blackstone and Apollo. So I think, but clearly what we're seeing as well from BlackRock is a kind of concerted push into private markets. They've been on a bit of an acquisition spree, made a lot of headlines buying GIP for 12.5 billion. They've also bought one of the leading data providers in private markets in Preqin. So I think there's a recognition within BlackRock of trying to be more of a dominant presence within the industry.
Just where do we stand on the industry and the opportunity set within private credit?
So I think within private credit, I think the asset class is clearly expanding. Some people expect it to double to 3.5 trillion by 2028. So clearly there is a big opportunity to be had, but at the same time, I think that opportunity is increasingly being shared by a smaller amount of leading practitioners. And so I think the growth in the industry is being focused on the likes of Blackstone and the likes of Ares. And I think BlackRock is understanding that and also trying to be within the kind of market-leading bracket that will be the firms that will be truly enjoying the benefits of the growth of the industry.
Hey, Silas, just fantastic. Thank you so much for joining us. Silas Brown there, our own Bloomberg, you know, Olympian in spirit, Silas Brown. Okay, some breaking news just crossing the terminal. This is fascinating. The PGA Tour and the Saudis are still working on the financial details of their joint venture of the LIV tournament and the PGA Tour coming together. I just want to read you what our reporting is because it's about pay. The particular sticking point is John Ram's reported $300 million LIV contract that was struck late last year. According to people familiar, some PGA Tour players want Ram and others to hand back the money that they've made. Other options include paying fines to participate in events, giving to charity, or agreeing to forfeit any future career winnings on the PGA Tour. Ram and the other LIV golfers have refused on any terms that would penalize them. So that is the sticking point. They want them to return the pay. Okay, that's the latest on golf for you. Coming up, we're going to set up the week and your retail sales data on your Bloomberg Brief.
everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It's Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading on this Tuesday morning. Numbers for retail sales for August, those will come out at 8:30 a.m. Eastern, maybe the most important retail sales data in recent memory. Jamie Dimon will then be speaking at Georgetown University. That's at 4:15 p.m. And then on the politics front, former President Trump has a town hall in Flint, Michigan at 7 p.m. Now, in terms of stocks on the move pre-market this morning, Dell extending some gains. It got a new outperform at Mizuho. The price target is 135. You can see it's trading well below that at 117. Their call is all about AI. Meanwhile, Keurig, Dr. Pepper, that also higher in the pre-market trade just by 1%. It raised its quarterly cash dividend by 7%. Again, Microsoft did something similar. Those shares are up about 2%. So we are just a few hours away, about 2.5 hours away from the retail sales data coming in. Will it move the Fed? Perhaps not, but maybe it will move these markets. Not much activity, save maybe for this equity market. We're moving higher this morning. Outperformance from tech, both because of what Intel is doing, that deal with AWS and the Microsoft dividend and buyback. Russell 2000 also outperforming. Your bond market is little changed. The yen, little change. Again, waiting for the retail sales data.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, If a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
The Fed is going to be cutting into a pretty good economy, and we don't have a lot of benchmarks for what that looks like.
The market realizes that either it's a hard landing or it's a growth scare.
We're really not sitting here in a position where we can absorb any kind of bad news easily.
The data, as of the last few days, has not been sufficiently weak to convince them of a 50 basis point rate cut.
There will be 3 cuts of 25. And at the end of the day, what matters is where we are at the end of the year.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your trading day started live from New York City this morning. Good morning for our audience worldwide on a 6-day winning streak on the S&P 500, the longest climb on a daily basis going back to the middle of August, just short of all-time highs on the S&P 500, at all-time highs on the equal weight on the S&P. We had some weight to that rally. Futures up by 1/3 on the S&P, on the Nasdaq 100 up 1/2%, on the Russell, the small caps up by 1/3. Your day ahead looks like this. The Fed's 2-day meeting begins today and concludes tomorrow. But we have at 8:30 Eastern time the most important retail sales print in the history of financial markets. The difference between 25 or 50 for a few of you out there on Wall Street.
That's what I was going to say. Seriously, I was thinking, I've never heard of a retail sales print that was this important, because suddenly this is going to make the difference between 25 or 50. I was looking actually at a couple of notes, and maybe that's a little too cute. There is this feeling that either way right now, the Fed is disproportionately weighted to a bigger move. It's just the retail sales that will either give it a nice patina or a negative patina in terms of what this means for risk assets. Are we cutting for the right reason, or are we cutting for the wrong reason?
There's some Democrats who would like an even bigger rate cut at the Federal Reserve. Dear Chair Powell, we write today to urge the Federal Reserve to cut the federal funds rate by 75 basis points. Sincerely, Senator Warren and company.
Yes, that's right. And really, is this any surprise? The market is debating 25 or 50, and Elizabeth Warren, the senator of Massachusetts, is basically saying, we've been asking you to cut, and now we actually today want a bigger cut. It is clearly the time for the Fed to cut rates. In fact, it may be too late. Your delays have threatened the economy and left the Fed behind the curve.
How much is this the kid in the class who's in the back of the room that's going like this to sort of say, like, I'm part of this conversation too, just because they're already going to cut rates and potentially by more than people actually think is warranted by the economic data. So to come out and say 75 basis points, I mean, what is this doing other than just saying, I'm here?
She hasn't left the conversation. She has been nagging the Fed to cut rates for a while now. But you bring up a really good point. You know they're going to cut rates. So why make this political when you know the Republicans are going to use it and say potentially it is political to cut before an election? We've already saw in June Donald Trump say they shouldn't be cutting before November 5th.
The key number here is 75, not 50, not 25, but 75. Now, some of you might be thinking maybe that gives the Federal Reserve cover to go 50 if they wanted, because the Democrats were asking for 75 and you went with 50 and maybe you avoid the political nonsense. I would say this: to avoid the political nonsense, don't send the letter at all to begin with, going into a massive decision.
Yeah, I don't know how many people are saying this gives them cover for anything, because frankly, it does make it sort of highly political. But yes, to your point, it sort of raises this question, is there any argument for setting this out other than just simply getting your voice in the mix? You could maybe make an argument, but the bottom line is, all this does is just heighten the attention on the wrong things at a time when a lot of people are saying that the Fed should be cutting at least 25 basis points to get rates closer to neutral.
So let's focus on the right thing. And I saw this in a bit of research yesterday from both Goldman Sachs, and Morgan Stanley. The data is really important, not just because of whether the Fed goes 25 or 50, because that's what's going to drive the equity market. This from Mike Wilson. If the labor market data weakens from here, markets can trade with a risk-off tone regardless of whether the first move is 25 or 50. That's why the data really matters. Retail sales this morning, jobless claims on Thursday.
That's sort of what I'm getting from a lot of the commentary as well, this idea that if we get a bad retail sales today, it isn't necessarily the 50 basis points that it solidifies. It's the risk-off tone that will come with that. If there is a positive retail sales print, what we might get is even still a 50 basis point rate cut and actually a risk market rally. What you're seeing right now is a question of, is this market overly complacent about the soft landing and about the positive type of scenario out of that kind of outcome?
We could be close to all-time highs on the S&P 500 going into this Fed decision tomorrow afternoon. Right now, equity futures up by a third of 1% on the S&P in the bond market. Your bond yields look like this on a 10-year maturity, down just a little bit by not even a basis point. The 10-year 361.20. In foreign exchange, just about unchanged on euro dollar, 111.38. Coming up this hour, we'll catch up with Jeff Yu of BNY as the Fed's two-day meeting begins. Sheila Kahulu of Jefferies on why the Boeing strike may be short-lived, and Ian Lincoln of BMO on the risk of a 50 basis point Fed rate cut. We begin with our top story, waiting for retail sales at 8:30 Eastern time, the last key data point before the Fed's big decision. Jeff Yu of BNY writing, jobs data do not make the case for 50 basis points. To us, the August payrolls report confirms a 25 basis point cut. Market pricing is still aggressive, indicative of a recession forecast. We don't agree. Jeff is here in New York. Jeff, welcome to New York. It's good to see you. Let's get to the base case then. 25. What does the rest of the picture look like at the Federal Reserve tomorrow?
Is, still soft landing, and I think they should confirm that. I think one narrative, at least from the other side of the pond, I guess, there's a concern that if it's 50, sure, financial conditions will loosen, but would that smack of panic as well? We've had that panic episode in August, and amazingly, the whole curve shifted globally, not just in the US, because where the US leads, the rest of the world will follow. But if you take a step back and you look at it globally this week, you've got Brazil thinking about hiking rates. I don't think the BOE is going to be that dovish either. So US is sort of actually, for the first time, I think, in modern economic or monetary policy history, kind of going by itself right now. But if there is panic heading back into the US situation, then will the rest of the world converge again? Then we get more comprehensive risk off. So very delicate balancing act. Everyone's watching.
As you know, equity markets have rallied going into this decision. Bonds have as well. Yields have dropped. It's unlocked some dollar weakness. Out of those three things, equities, bonds, and foreign exchange, is there a move there that you think we should fade, given that you think some of this is a little bit too aggressive?
So in terms of bonds, that actually, it depends when the curve you want to look at. Maybe the pricing, if you look at the front end, the pricing for a hard landing seems to still be there, or at least the tail risk of that is there, given how aggressive we are heading into next year, because it looks like markets want to push things through to like 3% or so very, very quickly. So in that context, it's affecting the entire curve, and not looking at the fiscal situation in the US, and you're not looking at the very strong consumption power of the US household, by the way. So in that context, are we going to be looking at some steepening further down the line? That's something to look at for sure. Equities, I'm looking at broader rotation. It's not so far as US equities mispriced. I just think asset allocation elsewhere globally is not as strong. There's actually value elsewhere, and you can take into account dollar valuations as well. So it's not a US negative story. Maybe positives elsewhere are underappreciated.
There's a lot to unpack there. I want to go to the first point you're making, where it seems like bond markets are overly pricing perhaps U.S. recession tail risk. The Bank of America Fund Manager Survey came out and said that about 40% of people said that the biggest tail risk was U.S. recession. Are you saying that that is an overpriced kind of estimate, and that should be much smaller even at a time where soft landing is looking likely?
Maybe slightly smaller. If you I know it's not exactly equivalent, but let's say if markets are pricing 40% of U.S. recession right now, that's not the base case for the US, right? So probably want to see it a bit lower at that point. But the trajectory right now, the degree to which, especially in August, they're pricing an emergency rate cuts. It seems like the sudden panic, towards it's either or, it's binary. It's either boom or it's very much gloom. I think some nuance is needed, and I think that's a communication strategy. But overall, if you look at the curve, probably further down the line, taking into account the fiscal and the lack of spending restraint, by all parts of by all economic agents. I think that's where the mispricing perhaps needs to be looked at.
I love that you're bringing up fiscal. I support that full-heartedly. There's a 20-year auction today. I'll be watching. I am curious, though, when you talk to people about it and you raise this concern, you say, I'm concerned about the deficit. They look at you and say, why aren't you concerned about Germany? Why aren't you concerned about China? Why aren't you concerned about the rest of the world? And guess what? It's the cleanest shirt in the dirty laundry bin or whatever people say. So how much can you really lean into this story that that's going to matter at a time where German investor confidence is falling off a cliff and China investment can't get off the floor?
Unfortunately, an 8 billion BTP auction recently attracted 130 billion in bids.
Record?
Right, record. There was a record gilt auction as well, and the OBR comes out with a survey warning UK's debt to GDP ratio over 50 years could get to 270%. Under a base case, actually, it could get to like 650 or something. Pick a number, right? And the worst case scenarios, the only country right now within developed markets which is actually doing proper fiscal restraint and acknowledged by the central bank in a positive sense is New Zealand, right? Large economy, like that's going to move the dial, right? But ultimately, if everyone is doing it, then at least in FX markets on a relative basis, I guess you can't see too much of a difference. But let's turn that around and say, if you can do it, if there is the will on the political side to actually go for greater fiscal restraint, right, then markets will reward that. Then it's not less dirty laundry, you find clean laundry, and then that's where benefit. So good luck, apart from New Zealand, I guess.
But Jeff, no one in the United States is actually seriously talking about fiscal responsibility.
Right, indeed. And to be frank, no one in Europe, right now is talking about it either. If I look at the UK, for example, there seems to be a delicate balance, between trying to raise, public sector wages, versus warning about, tax cuts, coming through across the board, and the need for credibility. And in fairness, if you look at EM, for example, especially Latin America, during the pandemic, there were fears that they would start pumping the fiscal guns. That actually didn't happen. So the underappreciated part, if I look for asset rotation maybe out of the US, you think about a place like Brazil, for example, they're going for rate hikes again. They barely started their easing cycle and now worried about inflation, and they've got a very nice and real rate buffer, 5 to 6% or something like that. So, but they're pushing forward. So why is the markets actually rewarding that? I'm not saying you penalize the US or US policies, but maybe in terms of EM, in terms of valuations and equities and FX, especially for US investors, taking advantage of strong dollar purchasing power still, right, then maybe that's where rotation needs to be looked at.
Well, who's going to benefit the most when the Fed comes out and cuts rates?
So I think two categories, outside of equities in terms of financial conditions. So the carry trade, maybe is that going to start to recover ever so slightly? We saw a bit of a negative turn of late, but there may be a bit of a rotation. And actually, once the US, once the Fed path is fully priced, I actually want to see the dollar strengthen a bit compared to, say, Europe, because so you all know my euro call, right? It's clearly probably not going to happen in terms of parity heading towards year end. I'm still looking at 105, perhaps, given all the negativity. But in August, what astounded me was that we saw the ECB pricing move towards the dovish side, 75 basis points or so towards year end, but the euro strengthened, right? So in that context, or euro dollar strengthened. So I can only attribute that to saying, right, dollar positions, dollar longs, that asset allocation much, much stronger compared to where we were. So the dollar was penalized by that, but now maybe at least on the euro dollar side and maybe some other pairs where the dollar should be doing better, the dollar could actually, oddly enough, benefit as well.
You're not the only one who's been surprised. The data out of Europe has been pretty dreadful. We had the ZEW investor confidence read this morning. That was rubbish too. And I think a lot of people sat looking at the screen this morning thinking, why are we up here at 110, 111 on euro dollar?
The biggest economy in the entire region just came out with investor confidence that was the lowest going back about a year. You take a look at prospects for auto manufacturers or even plants, U.S. chip plants that are going to be manufactured in Germany. Where is the engine going to be? Keeps being the question.
That list of reasons not to like Europe has got pretty long. Is it well priced?
Well, that's the thing. The longer it gets, the euro seems to be more resilient, right? So I think on a backward-looking basis, hindsight's always perfect, right? You actually find out, how big that short euro, that you're underweight, was, right? So if they're finding greater value, or maybe just seeing this as a short-term issue, but you listen to Madame Lagarde, last week, and you look at the current outlook, I think that they're hoping, desperately hoping, that this is just going to be a short-term blip. I'm not so sure. You read the PMIs, and you're coming from the S&P. So on competition from China's side and domestic issues, it's structural. So then you actually have an opportunity right now for the ECB to help. I'm not saying that they can help with structural reform in the European Union, but they can help at least ease the pain. But if that's not going to happen, then they could miss the boat on easing. So we're looking at policy. policy error further down the line.
The compare and contrast between the ECB and the Federal Reserve is quite remarkable. The fact, Jeff, that we're looking for this really dovish guidance from the Federal Reserve tomorrow, more dovish than the ECB, when the data in America is so much better than what we see out of the European economy. Is the policy mistake already being made?
I would say there's at least a 50-50 chance of that happening, if not more. And they were saying, and Madame Lagarde last week, she was grilled on, did you foresee, the weak data in Germany? And she said, yes, it was baked into the staff projections, right? So, well, and then she, of course, now highlighted, well, if there's downside risk, then they will reassess. I think there's enough evidence right now of downside risk on the corporate side, on the policy side, but that's not in the price of the euro, at least, and people have been burnt, by pricing in a more a dovish ECB. But when the time it comes, I think that could be quite a.
Are they constrained by their mandate? What's this about, Jeff?
Well, so they don't, have a dual mandate. So that's one of the things that they will point to, and the fundamental issue is public spending is very strong. Wage growth on the services side. If you look at the German Q2 numbers, only side that expanded was the public sector, right? So if that's going to drive wage growth, the only thing ECB will look at, then they'll target that.
Jeff, it's good to see you. Welcome to New York and enjoy your time here. Thank you, sir. Jeff Yu there of BNY on global markets. Equity futures session highs on the S&P 500 up by 0.4% with an update on news elsewhere this morning. With your Bloomberg brief, here's Yahara Hekes. Hey, Yahara.
Hi, John. Microsoft shares are rising in the pre-market, up nearly 2%. The software giant unveiled a new $60 billion stock buyback program and boosted its dividend by 10%. The new payout will be 83 cents a share. That's 8 cents more than the prior dividend. Meanwhile, the new shareholder cash return replaces Microsoft's previous buyback program announced back in 2021. Meanwhile, Amazon CEO Andy Jassy is cutting management layers and ordering staff back to the office 5 days a week. The changes are part of Jassy's efforts to streamline the company as complaints mount that it's become harder to get things done at Amazon. Jassy announced his shakeup in a memo to employees yesterday, saying he wants Amazon to, quote, operate like the world's largest startup. And Canada's Prime Minister Justin Trudeau suffering a major political setback. Trudeau's Liberal Party losing a special election in a Montreal district that had recently been considered safe. The decision raising pressure on the leader to step aside before the next election scheduled for October of next year. Trudeau showing no signs he plans to step aside, despite polling showing he's fallen further behind the country's Conservative Party. That's your Bloomberg Brief. John?
Key word here is scheduled. Yahara, thank you. Scheduled to be October next year. Let's see if he can hold on.
This is inauspicious for him. He is failing to hold on to an area that previously had politically supported him. It has been pretty tenuous for him.
We'll get you more updates on that story throughout today on Bloomberg TV. Up next on the program, Secret Service under scrutiny.
Our folks are rising to this moment, but it requires all of us to be able to have good conversations and make sure that we're getting the Secret Service where it needs to be. And I'm confident that we will achieve that.
That conversation up next on this Retail Sales Tuesday. I know, seriously.
You can't even do that with this.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
As we spend some time here on the broader presidential race,
Let's focus in on European politics.
Makes you wonder how politics might play out.
Lisa mentioned the Bank of America Global Fund Manager Survey. We'll be catching up with BFA in about an hour from now on this program. 8 out of 10 investors forecast a soft landing. It's pretty bullish. They call them nervous bulls in the survey. If you look at some of the overweights and the overweights on utilities is the highest since 2008. And the allocation to commodities at a 7-year low. Some of the allocations here speak to some very interesting stories.
Especially when we have person after person come on and give us 15 reasons to overweight some of the utility sectors, some of the bond-like areas, and then person after person. Yesterday we were talking to Savita Subramanian saying basically maybe energy is cheap for a reason.
What are the utilities trades about? What is that? Defensive, AI? What's behind it? What's the dominant concern here?
Yes. I mean, essentially,
All of the above, right?
well, it's the idea of a bond proxy, but then it's also the idea of you need to build out your infrastructure in order to get some sort of AI platform. Also, you have dividends, and people, we want income relative to bonds. Let's go.
Bond proxies, gasoline on that story over the last month. Equity futures right now positive by 1/3% on the S&P, on a 6-day winning streak on the S&P 500. Under surveillance this morning, Secret Service under scrutiny.
Our folks are rising to this moment, but it requires all of us to be able to have good conversations and make sure that we're getting the Secret Service where it needs to be. And I'm confident that we will achieve that because we don't have an alternative. Success, we have to have it every day. We cannot have failures. And in order to do that, we're going to have some hard conversations with Congress, and we're going to achieve that.
Here's the latest. The Secret Service and the FBI continuing to investigate an apparent assassination attempt on former President Donald Trump. The suspect, Ryan Ruth, appearing in court, charged with federal gun violations. President Biden telling reporters the Secret Service needs more help and Congress should respond. Bloomberg's Mike Shepard joins us now for more. Shep, welcome to the program, sir. Let's start with that line from the President of the United States. How is Congress responding?
Well, we heard yesterday from Senator Chuck Schumer, the Democratic majority leader, who indicated that there might be a favorable environment for adding some resources on the fly to the agency. It's pretty clear that it is stretched and spread thin. This is the second attempt on Trump's life in a little more than 2 months, and it's exposed some glaring shortcomings in their ability to meet all the protective needs of the people that they're watching out for. They have more than 40 people who now require Secret Service protection, current and former presidents, as well as other dignitaries. And then there are also visiting foreign leaders who require some Secret Service cover when they're in the U.S. And all of that is straining the agency.
But Mike, why is the Secret Service potentially going to be adding to the payroll on Donald Trump's second assassination attempt? Why didn't this happen after Butler in Pennsylvania?
Well, things move slowly in Washington, and our sense is that it's unclear the scope of the needs following the first incident. The first episode, that seemed to focus more on what happened in the immediate aftermath. Was the agency prepared? What sorts of protective measures were they taking, putting into place during his rallies? You saw that now when he goes out, and we'll see tomorrow in New York and today in Michigan, that when he speaks, he'll be surrounded by bulletproof glass. But when the former president is on his own, as he was on Sunday, what are they doing then? A snap visit to his golf course, the Trump National in West Palm Beach. How are they prepared for that? Apparently, they did not search the perimeter before this man was caught, and the suspect, Ryan Routh, was able to linger in the woods there for almost 12 hours before he was discovered and then later apprehended.
Mike, how is this changing the course of the race? I did listen to some of Donald Trump yesterday talk on a crypto basic town hall, but he's leaning into this now.
Well, he really is, and it's changing the narrative very quickly from what we had in our hands a little less than a week ago following his really shaky debate performance against Kamala Harris. Our memories from that encounter with Harris in Philadelphia a week ago were about him talking about some widely debunked conspiracy theory about Haitian migrants eating neighbors' pets in the Ohio town of Springfield. We also had him hours before this attempt on his life posting on Truth Social, "I hate Taylor Swift," taking aim at one of the biggest endorsements of the campaign so far for the vice president. And what we see is the narrative completely shifting. And now Trump is able to present himself as a candidate who is undaunted by threats to his life. And it will give him new energy also in fundraising and also play to the narrative that works with his base that I am being persecuted.
Just quickly here, Mike, yesterday Donald Trump was speaking to Fox News Digital, and he said that the perpetrator, the alleged perpetrator, said he believed the rhetoric of Biden and Harris, and he acted on it. Their rhetoric is causing me to be shot at when I am the one who is going to save the country, and they're the ones that are destroying the country. Do we have any understanding, Mike, of the motivation of the alleged perpetrator?
That's a great question, Lisa. We don't have any picture into the motivations of this man who was arrested on Sunday, nor into the shooter who actually fired shots at Trump during a rally in July. And they are still trying to piece that together. Investigators are checking his phone and social media records. They've gone to the companies for more data on that. But there is Trump has offered no evidence of how this rhetoric that he cited is affecting the minds of people like these two shooters. He is trying to blame Harris for this, but he is offering no evidence, and we've seen none so far, really. And in fact, both Vice President Kamala Harris and President Joe Biden were very quick to condemn this spate of politically connected violence that we have seen in the past couple of months.
Hey, Shep, appreciate the update, sir. Thank you. Mike Shepard there of Bloomberg down in Washington, D.C. Kind of stunning the lack of detail we still have on some fronts, given we've had 2 attempts on a former president's life in 2 months.
And the serial number on this gun was scratched out, so they couldn't even track where the gun eligible to be purchasing said gun. Lots of questions here.
Many questions, very few answers. Up next on the program, Sheila Kaiolu of Jefferies as Boeing freezes hiring with more than 30,000 workers on strike.
many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Six-day winning streak on the S&P and looking to make it day 7. Equity futures on the S&P 500 up by 1/3 of 1%. Similar move elsewhere, up by 0.6 on the NASDAQ. The NASDAQ 100 facing a bit of an apple-shaped headwind yesterday. Some concerns about iPhone pre-orders, and those pre-orders, those numbers for this phone being below the numbers for last year's phone.
Which is the reason why Apple dropped almost 3% over the past 2 sessions and really dragged down the NASDAQ. The Mag 7 down 0.4% in that period versus the Russell 2000, which was up 2.8%. It highlights just how susceptible the NASDAQ and some of the more tech-heavy indexes are to, say, feelings and deliveries and some of the rhetoric that might come out of it.
Who are you talking about?
Well, okay, I'm still Jensen Huang. I'm still talking about the rock star of AI, Godfather, whatever you want to call it.
Things are tense.
Well, it's just this idea, you know, people call, they get emotional, they want to understand where the deliveries are. I love that.
Are iPhone suppliers getting emotional?
I don't think so. It's a problem.
I think that's a big issue. So equities are firmer by 0.4. We bounced back just a little bit on the NASDAQ as well. If we switch out the board and get to the bond market, big focus on a 2-year yield. We've come a long way. We're down to 356. Earlier this spring, we had a 5 handle on a 2-year. Anticipation builds. Is it 25 or 50? This market's leaning quite strongly towards 50 now, going into retail sales at 8:30 Eastern.
And it's almost, is it going to be a good 50 or is it going to be a bad 50? Even though retail sales is the most important retail sales print that we've ever gotten in the history in financial markets, there is this point, it might not determine 50 versus 25. A lot of people are going to be looking tomorrow for what the longer-term neutral rate is. We're going to talk a lot about that. Do they give any guidance as to where the destination is? And if 3.5% is the destination, say mid-year next year, what does that do for markets, given the fact that a lot of people agree maybe this is fully valued, but, you know, you're getting yield?
We keep saying this, not all 25s, not all 50s are created equally. Tomorrow really is a 3-part act. So when you get that decision, you've got to look at the forecast and you've got to wait for the news conference as well and listen to the kind of guidance that Chairman Powell offers you, because Chairman Powell in these news conferences for the best part of 12 months has been very, very dovish relative to where the market has been. Now, why do I say that? Because every single meeting for like the last 7 going into this one, the 2-year has rallied on the day and yields have fallen.
How can he outdove market expectations? I think that's the fear that people have right now, is that they've gotten so conditioned by Dove Powell that there is this feeling, you know, how do you sort of meet all of that and then some? And you need the data to really cooperate, which is the reason why the Mike Wilsons of the world are saying, ultimately, this doesn't lie with, you know, the God that comes down to sort of drop the sort of tablets of interest rates, but really it has to do with the data that comes out.
David Costin at Goldman saying basically the same thing. Let's turn to foreign exchange. So yields come into Tuesday at or near the lows of the year on a 2-year and a 10-year. If you look at the FX market, that's just unlocked some even more dollar weakness. Euro dollar up to 111.38, and this is happening even with weak data out of Europe, and not just the one-off piece of weak data out of Europe. Like every single week we get data out of Europe, it's weaker than expected.
And every kind of forward-looking telegraph from Germany is that it's only going to be weak, given manufacturing. This comes, though, I think Jeff Yu nailed it. He basically said what this shows to you is not that Europe is doing so well. It is not that the U.S. is doing so poorly. It is about positioning and how much of a dollar long people had and how much of a structural underweight people had in the euro. That this alone was enough to say, all right, might throw some chips in. How long can that be sustained, though, ultimately, even if you do have a Federal Reserve cutting more, because arguably the ECB needs to be cutting more in order to sustain the economy.
Euro dollar 111.37. Under surveillance this morning, some news for you. Intel landing Amazon Web Services as a customer for its manufacturing business. The win potentially bringing work to new plants under construction here in the US. The company saying its US factory expansion remains on track, even as it postpones new factories in both Germany and Poland. Again, some negative news for the Europeans.
It's an absolute huge win for the United States, especially places like Ohio, where they're working on these factories. But as you said, Jonathan, a blow to Germany, postponing the factories there. This idea of nearshoring and the U.S. wanting to win when it comes to chips, wanting to get ahead of the fact that the biggest tech companies are enslaved to TSMC, chips coming from Taiwan, massive win. Also, we should note, $3 billion in a grant to make sure they secure those chips for the military. So potentially very profitable for the future.
$3 billion sounds like a lot of money. It is a lot of money, but then you hear the number 60, and what that means to the Microsoft stock is apparently very little. Microsoft unveiling a new $60 billion stock buyback program and raising its quarterly dividend by 10%. Shareholders, as of November 21, will receive a quarterly dividend of 83 cents a share, up from 75. The repurchase agreement replaces a buyback program announced in 2021 that was also $60 billion. The stock is up 2% so far this morning.
So this morning, the first thing I did, what's the dividend yield on Microsoft? Because I'm thinking about how this is a yield play. Maybe we can call, this the new yield play, an income sector, big tech. It's 0.7%. So even though they're adding to this, it's a drop in the bucket when you take a look at the overall market capitalization and how much people own. It just highlights how these numbers are distorted with companies that are this big. It also raises the question, is it because they don't know where else to put that money? When you start talking about share buybacks and dividends, although I guess, this is sort of, bupkis for them.
You can only buy so many chips, Bramo. And things are tense, remember, between customers because they can only supply so many.
So this is the tension, is that you get money.
This is the tension. You just sort of give it back to shareholders as well. Let's turn to Boeing and talk about real tension and park the snark. Boeing preparing for a prolonged strike by workers at its main hub near Seattle. The plane maker planning a range of cost-cutting measures, including a hiring freeze and temporary furloughs. The announcement coming as Boeing and union negotiators are set to resume mediated talks later on today. Shitakolu of Jefferies saying, word on the ground is the union is unhappy with the wage increase and lack of bonus. Our view is this should be short-lived, giving Boeing's focus on getting back to the table. Sheila joins us for more. Sheila, good morning.
Good morning.
Let's talk about what they want and what Boeing is willing to provide, how wide the gap is, and why you believe ultimately this can be dealt with in 6 weeks.
I think 6 weeks is potentially the break-even point for workers and Boeing. But in terms of why I think they're not so far apart is the wage increase is anywhere from 25 to 33%. And we've seen other unions come close to that. American just ratified its flight attendants last week at 33 to 36% wage increases, although I do realize that the Boeing workers have not had a wage increase since 2014. But that's fairly similar to the airlines. Air Canada is getting something approved as well in the 40% mark. So I think it's a gap between 25 to 40% at most and a potential ratification bonus of 3 to 5K.
Boeing needs some cash. How
do.
close are we to a capital raise of this company?
So here's the situation at Boeing. They ended Q2 with $12.6 billion of cash after burning $8 billion in the first half. We think prior to the strike, they're going to burn $3 billion. That puts them at the $9 billion mark. They've historically said $10 billion is what sort of capital they need to sustain their business. We think the strike burns about $1 billion of cash a month. And so that puts you in a territory where you could raise prior to earnings, potentially from a position of weakness rather than strength. We were looking to an equity raise as a clearing event to take some of that $57 billion in debt down, but now this could be because you need to necessarily sustain your business operations, which is why the furloughs are happening.
This is the reason why the fact that Fitch and Moody's are both looking at potentially downgrading it to below investment grade matters so much. They're on the cusp of being below investment grade, and there's a pretty big delta in terms of the funding costs for being investment grade versus high yield. At what point does it become overly punitive? Do they sort of get into this spiral if they do get downgraded?
Thank goodness we're in the equity markets. Fitch and Moody's have been adamant they weren't going to downgrade it over the summer on a few calls they've hosted. But, I think it's more than just, losing a few hundred basis points of interest expense. It's also, what does $57 billion do to the high yield market? Is that market as deep as the investment grade market? And we hear not. So I think, and you stay in high yield for a few years. It's not like, a quick 3-month move and you get upgraded once again. So I think the agencies are probably thinking of all these things. And again, I think the break-even point comes in 6 weeks, given even a 40% wage increase breaks even on $75K of salary on an annualized basis, because once you're on strike, you receive a stipend of $150 starting in week 3. So you're not getting paid for the first three weeks of the strike.
It's important to just keep remembering this isn't Tupperware. Tupperware just filed for bankruptcy. This is the company that manufactures a lot of the planes that we fly in every single day. This is a company that's been the national champion in the United States when it comes to the aerospace industry. How does this sort of get better from here at a time where, in some ways, this company is too big to fail?
Yeah, I think the management team is trying to do all they can. We've heard that management teams don't get on the factory floor, ask workers what they need to get to a good position, but Kelly Ortberg, the new CEO, has been known to do that. He's listening to factory workers, seeing what they want. So that's a good first step. I mean, I don't think a Boeing CEO has been on the factory floor since 2008 during union negotiations. So this is obviously a positive first step. We don't want a strike to happen. The deliveries in the first August, June, and July were in a similar sequence, which was positive. We were getting 30 deliveries a month. So there was some positive momentum. Obviously, this erases all that, and we're back to square one. So how do we get better from here? Clearly, we might need some sort of raise just to sustain the cash flow, but also to take down the debt once we're in a normalized position.
How much are they burning daily on this? Because they're not making anything while the workers are striking.
Yeah, that's a great question. It's hard to know, but we estimate that you receive about 60% of a payment of an aircraft when you deliver it. So about $30 million per aircraft that they're not delivering. So we just took a rough estimate when we put our $1.3 billion out there. We said they burn about, they're just not delivering those 30 planes and some excess overhead costs out there.
Boeing is so important to the industrial base of the United States. You're saying potentially 6 weeks is break even. The election is in 7 weeks. Could you see the U.S. government putting pressure on both sides?
There's a federal mediator, I believe, starting today to work with them. But it seems like, when we look at other unions, they haven't had to do that. All the airlines came to fairly quick conclusions with their pilot and flight attendant agreements. There's still some out there, but we haven't necessarily had to take these steps. And of course, this gives more momentum for other, other unions that are potentially set to strike. Textron has September 20th union agreement down in Wichita. They've never had a workforce strike, so that's another one we're watching for Thursday.
Sheila, stock's at 155. If we have a capital raise of $10 billion, what do we price that capital raise at?
Well, these are tough questions. I think it depends when they raise, how long the strike lasts. This is a global duopoly. That's why we continue our buy rating on it. But right now, another thing to note is secondaries have never been so large. We don't see $20 billion secondaries. So $10 billion is sort of where we're putting the cap on a potential raise. Every $5 billion is 1% dilutive, so not a lot of dilution there.
This was the setup question for the next question. You've got a price target of 270.
Oh, yes.
How hard is it to achieve 270 when we haven't seen the capital raise yet? We don't know what number it's going to be priced at. We don't know how large it's going to be either.
It keeps getting pushed out. It was a fiscal 26 target, and as those delivery numbers get pushed out, we've cut our delivery estimates by 25% since January. So they continue to miss, and it's, those just get pushed. That you can't manufacture 700 Maxes in a year. You just go from 350 to 500. And I think, the cap is around 500, 550 Maxes a year, just where the supply chain is.
Sheila, it's good to see you.
Thank you.
Sheila Coley there of Jefferies on the latest with Boeing. Boeing in a tough spot. Over the last 12 months.
What a mess. I mean, this is at a time where you've got to be investing in forward-looking technology. How do they get those sort of initial investments even if they're just trying to stave off, plug the holes of the cash burn that keeps on going? It's a really tough situation.
They've got to hope it ends in 6 weeks. They've got to hope.
Yeah.
Hope and a prayer.
Someone can actually push them together.
Yep. Equity futures right now on the S&P just about firmer by 1/3%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. Secretary of State Antony Blinken plans to make this his 10th trip to the Middle East since the Israel-Hamas war began almost a year ago. A State Department spokesman said Blinken will fly to Cairo to discuss the negotiations for a ceasefire in Gaza, broader security issues in the region, as well as for talks with Egyptian officials. The statement only mentions one stop in Egypt and does not say that Blinken will travel to Israel on this visit. Meanwhile, hip-hop mogul Sean P. Diddy Combs was arrested by federal agents in Manhattan last night. While the indictment is sealed and the charges have not yet been announced, Combs' lawyer says he thinks the rapper faces allegations of racketeering and sex trafficking. The U.S. Attorney's Office in Manhattan says it will unseal the indictment this morning. And the PGA Tour and Saudi-backed Live Golf have reached an impasse amid their blockbuster deal. And it all comes down to pay. PGA players want Live golfers to return the millions they received for moving to the new league. And they're pointing squarely at Jon Rahm, who signed a $300 million contract with Live last year. But Rahm and other Live golfers have refused to agree to any terms that would penalize them for taking a risk and leaving the PGA Tour. That's your Bloomberg Brief. John?
Yeah, Harry, thank you. I think Jon Rahm got an $18 million bonus this weekend. It's not bad, is it?
I mean, I feel for him.
Do you know how much Live Golf I watched this year?
You watched a lot. No, really?
0.
Why?
It's really, really sad that they can't get this together. There's some great personalities over in Live. Bryson is one, Brooks is another. I wish they could get it together so we can have all these guys on the same tour all over again. I think it's very sad. I haven't watched a single thing. I don't even know where to watch it or where to find it.
But you watch PGA.
All the time.
Yeah, just to have the...
Yeah, you know, Jim Nantz. That's all I'm there for. Jim Nantz, CBS. Up next, getting ahead of the curve.
You want to look ahead to where inflation is going to be in a year's time, where the labor market's going to be. I think they should go 50, yes. I think they should catch up.
That conversation up next, live from New York City. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Live from New York City, a little bit later on this morning in Washington, D.C., Chairman Powell will wake up and get together with the committee for a two-day meeting. And that meeting could be influenced by what happens at 8:30 Eastern Time. If you believe what you're told on Wall Street, that retail sales is the most important retail sales print ever in the history of financial markets. Equity futures look like this on the S&P 500, firmer by 1/3%. In the bond market, unchanged on a 10-year, 361.57. Under surveillance this morning, getting ahead of the curve.
The main issue from the Fed side is the communication issue. we have seen a lack of communication as to a couple of things. One, the destination of travel, where the neutral Fed funds rate is, and two, how to get there. You want to look ahead to where inflation is going to be in a year's time, where the labor market's going to be, and where income is going to be. I think they should go 50, yes. I think they should catch up.
So here's the latest this morning. The Fed decision just 1 day away, with traders divided on whether the FOMC will cut by 25 or 50. Ian Lingan of BMO writing, the primary risk of a 50 basis point cut is that the market translates the move into a series of 50 basis point reductions. That quickly brings the Fed funds rate back to neutral, thereby effectively cutting for the Fed and potentially stoking reflation. Ian joins us now for more. Ian, it's good to see you, sir. Thanks for joining us.
Thanks for having me on.
I want to start with your note from yesterday and pick out another quote. Can we expect, quote, a notably quick pace of cuts in the absence of more meaningful downside in the real economy? Said differently, will the Fed simply mark to market the dot plot, or are investors in for a surprise? What's your base case?
So I think they should go 25, but I suspect that if we go into the event priced with a higher than 80% probability of 50, that there's a really good chance that they move 50 simply to front load the process. Now, this becomes tricky for the Fed from a communications perspective, because recall what happened in June. We went into the June FOMC decision, they'd already submitted their dots. And so if it is a game time decision, we're walking in, we're going to get 50, but it's going to be hawkish, or 25, and it's going to be dovish.
So, Ian, let's talk about retail sales and how that might influence things. Are you saying it's not that they're data point dependent, it's that that data point could shift market expectations so close to 50 they won't want to disappoint them?
Only if it's really weak. If it comes in stronger, it's not going to be part of the analysis, because we already know that the consumer remains on relatively strong footing. But if we see a negative print, particularly in that control group, that probably tips the scale to 50.
What are we pricing in right now in the rates market? We've heard a lot of people disagree around this table. Some people saying it is accurately pricing in about a 40% chance of recession, which is the baseline for Bank of America, the fund manager survey that just came out. Other people saying it prices in a much bigger tail risk of something that's negative. What's your take?
So when I look at the futures market, what I see is the market expects the Fed to get back to neutral, but not end up cutting into the one-handle territory. So that implies that, at least from a monetary policy perspective, we're still in a soft landing narrative. Now, 10-year yields close to 350 suggests that we're in for some economic downside over the course of the next 2 or 3 years, which I certainly agree with, but I do think that the soft landing narrative can probably survive this year, particularly if the Fed is a bit proactive. And even if we see a little bit of weakness towards the end of the year, the market will still think that it's alive.
Do you not buy the argument that they're just trying to get back to neutral, so they're not increasing their restrictiveness? In other words, does that hold less weight for you when you don't have clarity over what they believe the neutral rate to actually be?
Well, one thing we know is true is that as realized inflation decreases on a year-over-year basis, that means that real policy rates are more restrictive. So given where we are in the cycle, they need to cut rates just to keep the prevailing level of real rates as high as they are.
Ian, if we get a softer retail sales print and we have the Fed coming, or the market starts pricing in 50, more notably, not on a knife's edge, really starting for 50, but the Fed comes out and does 25, what happens to the market?
I think it all depends on how Powell spins it, and it all depends on what the dot plot tells us. Because recall that in June, the 2024 dot was 5.1, 2025 was 4.1. If we look at what's priced into the market, to simply mark to market, we have to get to 3%. And so if the Fed says, okay, we're going to neutral, that gets us to 3%, and they do that via the 2025 dot, I think that the market doesn't sell off as much as it would otherwise.
You mentioned the risk of stoking reinflation or reflation. Bill Dudley yesterday, formerly of the New York Fed, wrote in Bloomberg Opinion, he thinks they should go big, he thinks they will go big. And he asked himself this question: do downside risk to employment outweigh upside risk to inflation? I'm going to address you with that question. Do you think they do?
Well, they certainly did throughout the bulk of this cycle. Now we're at the point where we have seen the unemployment rate materially increase off of the cycle low. The conversation about whether we're overdue for a spike higher in unemployment remains very valid. In effect, what the Fed is doing is they're changing monetary policy for the second half of next year, not for the current data. So it's the trajectory of the prevailing data, and it might make sense to go big early with the expectations that they can solve next year's problem.
We keep saying the Fed, but when we're talking about the Fed, we're talking about a group of individual policymakers who apparently have some different views on where we are at the moment. And I wonder tomorrow, when that decision drops and we talk about the decision 25 versus 50, and then we go for the forecast, we'll just be talking about medians. Will that mask a great divide on this FOMC?
I think that it might. We also might see a dissent. There's nothing to suggest that everyone needs to vote in for 25 or 50. So I think that that could be another way to communicate to the market that it was a knife's-edge decision and it's uncertain going forward.
Do you think that there's a chance of a 75 basis point rate cut because of Elizabeth Warren?
That's really not been top of mind recently.
The reason why I ask is because we were talking about it earlier, and as someone who's in this market, I wonder sort of whether people actually dismiss this, whether it's actually harmful to the functioning of the Federal Reserve, or basically just noise with people trying to get their voices heard.
I think the latter point. I think that they're just trying to be part of the macro conversation, and it's not going to be particularly influential for the FOMC.
I love that you got Lisa to say noise for you. I do think this gets much more interesting November 7th. I keep going back to this. The next Federal Reserve decision after this one will incorporate a conversation about what the politics in Washington, D.C. looks like. Now, they'll get away with the fact that they don't have to put out new forecasts in November. They can wait until December. But even when we get to December, I don't know what the makeup of Congress will look like. I don't know who will be in the White House. But they won't even be able to make projections based on the policy changes we all anticipate in financial markets in 2025. This is where things start to get tougher. Not at this meeting, at the one next after that, and the one after that.
We're on the same page, because at this meeting, they're dealing with a slew of economic data that we're all grappling with, and there's a question of just where the balance of risks are. On November 7th, they're going to be grappling with whether we know who's going to be the next president, whether we know the composition of Congress, and what those policies that actually get put into place are, and then how they reflect that in their projections at a time where anything that they view, anything they do will be viewed as highly political. It is a very difficult moment.
They'll likely be walking into that meeting not knowing who won the White House. Remember how many days it took in 2020, and the state that everyone is focused on, Pennsylvania, is not able to start counting these mail-in ballots until Election Day. So potentially the Fed is going to have a meeting with a tremendous amount of uncertainty clouding their judgment.
I believe that decision is on a Thursday as well. Push back a single day. I believe November 7th is a Thursday.
That's ridiculous. Yeah. I can't alter my schedule.
They're not political, so why would they shift it back? Is that what you're suggesting?
Well, I just think that, you know, if it's a Wednesday, it's a Wednesday. You don't start on a Wednesday, you start on Tuesday. That's how it goes.
I believe it's going to be on Thursday, November 7th.
Sacrilegious.
Equity futures on the S&P 500, firmer by 1/3 of 1%. A little bit of a lift in this equity market on a 6-day winning streak. About to become day 7 on the S&P 500. It's quite a run. Over that period, higher by more than 4% of the S&P 500. In the bond market, the 10-year 361.94, yields near the lows of the year as this FOMC meeting commences down in Washington, D.C., and the dollar near the weakest level of the year. Euro dollar 111.34, and dollar yen still in and around 140 and 140.68. Coming up next on this program, we'll catch up with Matt Miskin of John Hancock. We'll speak to Jessica Taylor of the Cook Political Report, and Elias Galou of Bank of America, and Katie Kaminsky of Alpha Simplex. Is Katie still long bonds?
I think she was wavering. She was actually going back and forth. This is going to be an interesting conversation.
Interesting. Kaminsky coming up in the next hour, live from New York City this morning. The second hour of Bloomberg Surveillance is up next.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
In terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region, simply because it's a region that is actually a bright spot amongst very few in the world today. And people always talk about the flavor of the month. Actually, I don't want to sound too, large-headed, but actually we will be the flavor of decades. We are determined, we have long-term plans, and we are very clear and committed on our commitment to the investment community at large. I'm not talking about one individual country, but at large in the GCC, that we mean business, that we are willing to take every step possible to make it easier for investors to do business in the region, that we are willing to do a lot of structural changes, including actually making it very predictable, very consistent policies.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
I think generative AI is a big transformation story for financial services. The reality is that valuations are full.
Heading into November, we do think credit spreads will widen.
Invest in the short end of the market. I think the upside in buying longer bonds just doesn't exist.
It has been a tremendously complicated market to navigate for everybody over the past 4 years.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
We are looking for a 7th day of gains on the S&P 500 from New York City this morning. Good morning, good morning. The second hour of Bloomberg Surveillance starts right now with equity futures up 0.25% on the S&P 500. Snapping back on the NASDAQ 100, equity futures positive there throughout this morning, up by 0.4% on the Russell. The small caps up 0.1%. Let's take a look at the week ahead in the next 24 hours. Later on this morning, 8:30 Eastern Time, Andrew Hollenhorst City. This will come down to committee dynamics and Tuesday's retail sales report. That retail sales report drops this morning.
We've been joking about how it's the most important retail sales report ever in the history of financial markets, yet there is some truth to that given the fact that this has suddenly become the make it or break it point for how the Fed decides and how they really direct their communication tomorrow about what they decide, how much they decide to cut by.
It's problematic given that they talk about the totality of the data and we're only talking about one single data point. Ian Lincoln of BMO made the argument 10-15 minutes ago that this was about expectations and a Federal Reserve that did not want to disappoint expectations, and that if you get a weak print, particularly on the control group, that you have this scenario where markets really start to fully price a 50 basis point cut, and that's something this FOMC won't be willing to disappoint.
Especially given the fact that you probably, in that scenario, depending on how bad retail sales is, would get some sort of sell-off in risk assets, and that's sort of the key. What are the conditions for this cut to perfectly perform in line with markets that are certainly set up for a 50 basis point rate cut, the right kind of good economic data, and a Federal Reserve willing to aggressively get ahead of any real weakening to prevent it from ever happening at all?
Well, to Ian's point, what's going to matter almost as much as whether they go 25 or 50, as he says, no one's really talking about 75 besides some senators in Washington, D.C., is the dot plot and the communication. How does Powell come out and spin this, especially if there's a dissent?
If we're doing 50s now, with jobless claims at 2:30, don't joke about Senator Warren. It won't be long before we start talking about 75s. If you actually get materially weaker economic data, particularly in the labour market over the next several months, that conversation will switch very quickly from 50 to 75. I remember back in 2022, people were laughing at the prospect of 50 basis point hikes, 75 basis point hikes. They were laughing about the prospect of a string of them. Things change very quickly.
Especially if you believe that you're behind the curve one way or another, if you're behind the curve on the way up or if you're behind the curve on the way down. I think that, Jeff, you really nailed it when he was talking about if you go below the rate of neutral, that really requires some degree of weakening that goes beyond what we're seeing currently and would be priced as a risk-off move. The ongoing question I keep having is, what would you rather, know the number of basis points that the Federal Reserve is going to cut by, or how the equity market responds to it? Because it has to be messaged in terms of a good hike for the right reasons or a bad hike for the wrong reasons.
Show me the unemployment rate 12 months out, and that's all I care about.
I keep calling it hikes because I've just
it's
get my head
confusing.
around
It's
it.
confusing.
It's
I get
cuts.
it.
They're cuts. They're not hikes.
But ultimately, I just want to know the unemployment rate 12 months out. And then I think you've got a decent stab at having a decent guess at what tomorrow's prices are in the equity market.
I went on the University of Michigan sentiment survey.
Yeah, that's what you'd like.
Yeah, 5 to 10 year inflation.
Apparently that's what Chairman Powell would like as well, based
Maybe.
on experience. Equity futures on the S&P 500 up by 1/3%. Call it 1/3% on the S&P 500, pushing higher. Yields a little bit higher as well, by not even a basis point. We're pretty calm here, stable on a 10-year at 361.94. And in foreign exchange, the euro going nowhere too, 111.34. That big data point just around the corner. Coming up on this program, here's your lineup for this hour. Matt Miskin of John Hancock, as markets remain split over a 25 or 50 basis point rate cut. Jessica Taylor of the Cook Political Report on the prospects of a divided government in Washington. And Elias Galou of Bank of America on the latest Global Fund Manager survey calling investors nervous bulls. We begin with our top story. Uncertainty surrounding the Fed's next move, reaching its highest level since the lead up to the financial crisis in 2007. Matt Miskin of John Hancock Investment Management writing, if you are not easing, you're tightening. The bond market has already priced in 2.5 percentage points in rate cuts over the next 12 to 16 months. If the Fed chooses less than that, in essence, they will be tightening monetary policy. Matt joins us now for more. Matt, welcome to the program. Have you ever, when was the last time you saw a decision this finely balanced, 24 hours out?
I don't remember one. I think 2015 was the last one that I've heard of as recalling this, but it is leaving a lot of uncertainty. And you know, I think the Fed would like to have more prepared kind of communication around this. And, you know, what we're looking at is, though, not to overemphasize one meeting, one data point. I know retail sales are going to be exciting here in just about an hour. But at the end of the day, we're starting a cutting cycle. That's what we know. We know that inflation has come down a lot and the unemployment